Shout out to everybody here. Bitcoin taking a beat down, getting out of bounds here on the 1 hour time frame. The bulls are attempting to stay alive. There's a lot of liquidity below there. 92.5 seems that we want us to be swept there, though. Looks like we may see more downside. A tough road ahead for Bitcoin today. We're going to break it down. We'll see you soon. Shout out to everybody here on the live. Thank you for jumping on at Bitcoin in crucial territory, $94,770. Looking like we're going to see some lower lows here. BOOKMAP suggesting 91K. And we're going to break it down for you right now. Here, go. I was running because I had left something and I had to get it. And if I didn't get it, I wasn't going to make it. And if I wasn't going to make it. Shout out to everybody here. I love you. Let's break it down. You got to stay positive no matter what. Market stinks. Counts are down. Everybody flattened. Altcoins destroyed. Life is just an empty box of chocolates. But you know what? We're going to make bacon on the beach here some way, somehow today. We're going to find a way to be positive, find a way to be amazing. We might even make some gains. I'm excited. I'm open-minded. I believe there's a big opportunity coming. And I've been buying Bitcoin on the lows. And if we keep going down, I'm going to continue to buy bits of Bitcoin and amass a little Bitcoin stash as they continue to dump it to the downside. So I'll use the fear to my advantage. I'll say, hey, I'll have to accumulate for the next 3 years. We'll see for the next halving. We'll go from there. And we'll take it one step, one day at a time. So I'm open-minded. I do have a long-term plan. And I'm going to stay calm no matter what. Let's put the lemon into the water. Okay. And let's get started on an amazing journey. If I can just catch my breath for once. My goodness. Here we go. All right. Moving forward onto Bitcoin. Let's take a look at what we're seeing here for BTC. Nasty dump, an enormous liquidation. Again, we lost the 200 MA on the 1 minute time frame. Sometimes that's not enough. I use the 30-second. That was one of the fastest liquidations I've ever seen in my life. In 5 seconds. I mean, that's kind of crazy. But they moved the price from 96.5 to 95.1 in 10 seconds. Like, come on, guys. A 10-second liquidation. Look, we're on the 5-second candle. 1, 2, maybe 15 seconds. You liquidate everybody in 15 seconds? I find that absolutely absurd. In absolute true insanity. I'm going to have to start trading the 5-second chart. Every time we break above the 200, I'm in. Every time we break below, I'm out. You know what I mean? Short, long, short, long. Anyway, 1 minute time frame. Can we get back above the 200 MA? Can we crawl? Can we make a higher low here? Is there still some hope for the bulls? Or is this just an absolute disaster wrap dumpster fire over here? And could it get worse? Somewhat of a little, in my mind, looks more like a bear flag than anything else. And as I talked about, we're going to break down kind of what I talked about. But if you watch my channel, if you've been with me, I've been talking about the 22-hour 200 MA. And I've been like, you know what? As long as we stay above it, we remain bullish. I said, if we close a candle below that, though, we will go to the downside. So we're looking for this falling wedge to break back to the upside here for Bitcoin. You're looking to make some type of shoulder, head, and right shoulder that could kind of get us out of this and break us back above. And you're looking for the 1 hour time frame to get back above the 200 MA. If you can get that, we're going to be in, we could possibly get some type of reversal. You're also seeing, is there a good enough bullish divergence here? And honestly, that's divergence right there. See, from wick to wick or candle to candle is a downtrend. And here is clearly an uptrend. I mean, how much lower can you go? Could have that been the last shakeout? I don't know. BOOKMAP suggesting much, much lower. Like when you open up BOOKMAP, it suggests, okay, you could go to 93 and to 91. However, this was a little thicker earlier. Let's take a big look here at BOOKMAP. BOOKMAP showing you where the liquidity is. Link in the description below. If you'd like to have BOOKMAP in your cozy house, all to your little old self whenever you need it, I would suggest it's pretty awesome. And get to know it, get to use it. So it's telling me, hey, a bunch of people along with stop losses here and here. All right, and there's still a massive short liquidation at about 101,000 that they're not going to forget about you. They're going to come get you at one point, I'm pretty sure. But they're going to create a lot of fear. Maybe they, a lot of times too, when they don't think there's enough liquidity up here, or if just the market itself doesn't get enough, it's going to continue to draw down. And what that's going to do is going to create more shorts, until the shorts are so enticing. They're more enticing than the longs. They've beat down the mentality of the longs, and they have everyone thinking short. we flip the other way to the upside. But right now, how I play it really simple. I say, okay, the most liquidity is where we go, and where's the easiest place to touch. And right now, you can see 94,000, 93,500, and 93,000 are the most likely scenarios of a move to the downside. All right, and even says we could get all the way here to 91,005 and go lower. So it would look to short altcoin, short Bitcoin, right? That would be the play for today, somewhere down to 91,000. Like, so, you know, again, I'm not guaranteeing it. I've seen this reverse and whip to the upside, and that's why I would play the 200 MA over anything that I tell you right now. But BOOKMAP, I'm doing a BOOKMAP analyzation right now. Nothing else is telling us there's likely a move here down to $91,000. But, you know, only time will tell for BTC. But that's what I'm seeing here on this nasty dumpage. And, you know, I'm the man with the plan, try to show you when the dumps are done. A lot of people come to this channel to try to find out when the dumps are done. You know, they're kind of not, people don't know what's happening. They're a bit in shock. They're like, when is this going to be over? When is the pain over? And I say, hey, we're going to find the bottom of that day. We're going to find the bounce. We're going to make it happen. So shout out to everybody here on the live. Thank you for jumping on in. Appreciate each and every one of you for being here, sharing your most precious asset with me, and that is your time. Welcome to the Crypto Liver Show. We're here every single day. Don't forget. So we're looking for this bounce on this falling wedge back to the upside. We're looking for this inverted head and shoulder. You don't have to be perfect. Again, let's take another look at this just in case we're just beginning the stream. So anything could happen. And what happened today? Like, what was going on? Well, we had CPI data coming in hot, okay, at 8:30 this morning. And when CPI data came in hot, it said we had really high inflation. Now, the strange thing about that is, and we're gonna let me get that on screen here. The strange thing about the CPI data is indirectly, non-indirect. We really kind of want there to be high inflation. If you're a Bitcoiner, in a way, because it paves the path for them to basically raise the rates. And to lower the rates. If they lower the rates, because if the economy is great, we can keep the rates flat. So let's see if did this change the CME watch tool at all. And this would be really interesting to see. This would switch to maybe 60-40. I think it would have. No, not at all. They're still stuck on 97% no rate cut in March. Now, it's too early to tell. Maybe a little bit of a bump there. Maybe this takes a couple days to filter in. I'm going to take a look at this in 2 days and see if it changes. But so Wednesday, CPI, 8:30, right? Thursday, usually we have PPI too. Yeah, so PPI tomorrow. And that's going to, and then unemployment claims. And remember, unemployment claims weren't too bad despite the rate last time. Like, it was when we had a huge pump for Bitcoin last week. I basically read it inverse and basically counter traded it. Made one of my best trades on a day-to-day. We got that move. Fed day as well in February. We got a move. So we've been trading some of these moves, but I'm usually very cautious with it. So CPI data comes in at 3%. Forecasted 2.9, previous 2.9, saying year over year 3%. People are paying, the price of goods are going up. Inflation is not curved. He's like, we're going to get to our target rate of 2%. It just, it looks like we're moving up, not moving down. So what were you doing? You know what I mean? We've done so much. If this keeps going up, what does the Fed do? People lose faith in the Fed. All right. And Jerome Powell is actually testifying as we speak right now. And I guess we kind of have to jump on in here to see it. I just wanted to give you, the up to what's happening here for Bitcoin. We get above this 200 MA, we can see ourselves getting a pump. That is a catalyst for a move to the upside. Just like there, it doesn't mean it's going to be amazing, but it is a catalyst for a move to the upside. Two different ways we could see this. Bitcoin could be bearish and try to, but we could also be kind of bullish here. Make some type of right shoulder and jump on out of here. And to me, it was kind of just like a false, like a FUD reaction to the market. Like, if anything, this should be good news for the market. We were waiting for this type of data. We haven't gotten it yet. So I don't know what's happening, but you would think this is good news for Bitcoin. You'd want to see that the fact that because they're going to have to cut the interest rate. They cut the interest rate, it floods more money into the market, cheaper, more money, have more, people have more money. They throw more money into risk on assets. And, Bitcoin has a bit of a chance here to get a bit of a move. Now, no guarantees, but that's just, one thing we're looking at. So earlier today, we saw Bitcoin kind of fall into this symmetrical triangle. Okay, and you could see that this level would take you to 96,100 if we got the move to BTC. So let me see here. I believe we do have JEROME. So let me take a look here at what's happening.
Seen supervisory documents which confirmed that Biden's Operation Choke Point 2.0 was real, despite assurances that these unacceptable practices would end following the Democrats' first Operation.
I like the music, right? It's like kind of
1.0. We are seeing an unfair playing field that results in disastrous consequences for legal businesses and law-abiding citizens. On one hand, if you were in the private sector and you do your job poorly, you would face consequences, reprimands, suspensions, or even being fired. But if you are within the walls of the federal government, such as a bank regulator, you will face no consequences for your actions. Even if you pressure a bank to cut off services to digital asset firms, political figures, and conservative-aligned businesses and individuals. To me, that goes against the principles of fairness and market access. Over the last 2 years, as the ranking member of this committee, I have consistently argued that Basel III endgame proposal will raise costs and limit credit access for hardworking Americans. And while I'm glad this proposal was not finalized, the uncertainty surrounding
the cross above the 200 MA should give us the pump, and we're getting it here to the upside.
On the sidelines, limiting access to that capital.
Now they're ripping the shorts.
Small businesses across our country. Now, as chairman, I plan to work to rectify the issues of the Biden administration. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future and the plans that you have for right-sizing the financial regulatory framework, specifically around Basel III. To create jobs here in America, we need to make sure there's capital and liquidity in the market. And we also want all Americans, even those growing up in poverty like I did, to know that they can access the capital necessary to start new businesses, grow existing businesses, buy a home, and pursue their American dream. Chairman, I look forward to your comments and your testimony. I will simply say that I believe that weaponizing an independent agency like the Fed for liberal positions, from debanking crypto, bank stress test, and the green financing scheme, is not calling balls and strikes as a fair referee. And I hope that we are getting ready to clean that slate, start afresh, and focus on a healthy economy. Ranking Member Warren.
Thank you, Mr. Chairman. Chair Powell, it is no secret that you and I disagree on the need for strong bank regulation, on monetary policy, and on the Fed's stock trading scandals. We have sharp differences, but I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president, Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research. Now, co-president Musk and his OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing the $18 trillion consumer lending market. 0 cops.
Is this yesterday?
Investigations into illegal foreclosures and auto repossessions canceled. exams of giant credit card
Yeah, this is yesterday, right? Do we have today's? Here we go. Sorry.
I've got concerns about that. You're not abdicating your supervisory
I caught it. I was like, I heard this before.
Vice chair for supervision. Do you agree that it's the Board of Governors that has the responsibility for bank supervision policy?
I do, and I would also agree that we need to carry on with our
I'm here for the chart,
regulatory
man.
Supervisory duties. We can't take a holiday, and we will proceed with the things that we should be proceeding with.
You testified in the Senate yesterday, and I know you enjoyed time with the senators, and you talked a little bit about Basel III endgame. And again, in my opening statement, I talked about that the intent was to harmonize those rules, true, for the largest institutions in the world, but also do that in a way that's capital neutral. And many of us here in Congress on both sides of the aisle felt like Vice Chairman Barr's approach was gold plating already high standards for American banks. You testified yesterday that you think bank capital levels are about right for those large institutions. Would you tell the committee today that it's your intent to repropose a Basel III endgame approach, just speaking on behalf of the Fed only, not the other supervisors, and that it be take into account the comments, and that it be generally capital neutral?
We do intend to repropose Basel III endgame, and we intend to do that just as soon as we can get together with the new leadership at the two other banking agencies. And as I mentioned, I think we can do that pretty promptly once those people are in place. I look forward to doing that. My long-held view, as I've said in many of these hearings, is that capital in the banking system for the largest banks is at about right. And that would be my starting point on going into these discussions. But I do want to defer. I do want to.
So you want to stay above the 200 MA here with the 21 coming in.
Upcoming.
It's about the charts just as much as we listen.
Agencies to have their own views on that.
I think that's important. I think it needs to be coordinated and harmonized among our supervisory agencies. And I do want you to take into account how Basel III endgame proposal interacts with other pending rules, whether they're on liquidity or the other things like operating risk in the companies. I think that was a lot of centrality of the comments that we saw on your Barr proposal. Turning to monetary policy, looking back at 2020 and 2021, I was looking at all the principal monetary policy rules that you report in your semi-annual report. And had you followed any of the monetary policy rules that you track, they would have had you tighten sooner in the cycle rather than waiting. And I think that could have reflected, maybe not seen us have a 40-year high in inflation. Using the benefit of hindsight, do you think you should have looked at those rules more closely in the open market operations and tightened sooner?
I will say, and I've said before, that hindsight suggests that it would have been good if we had tightened earlier. I don't know how much difference that would have made, but I'd be very careful with those rules.
It doesn't matter because it doesn't matter.
In the middle of last year suggested that our policy rate was a couple hundred basis points too high. You know, so we need to. They're a starting point, not an ending point. It's
right. This flag
We've
right
had
here,
this
everybody.
Conversation before. The point is that they do offer a roadmap, and you do mention them in writing in your monetary policy reports, except for one time during the pandemic. And I think, though, that you're adding that to your reference point and your forward guidance and in your communications, I think would be important. Can you tell us about the review of the inflation targeting and when you expect to complete that?
Expect to complete it by the late in the summer this year. We're just beginning it now, and we're going to look at all the decisions that we made, why we made them back in 2020. We're going to ask ourselves what's changed. We're going to be open to criticism and good ways of thinking about it, and I think we'll make appropriate, discrete adjustments.
I thank you for being with us today, and I turn to the ranking member of the full committee, Mrs. Waters, for 5 minutes for your questions.
Thank you very much, Mr. Chairman. It is no secret that President Trump, that he wants to do away with the Federal Reserve altogether.
I like the scalp here.
He
above
said
the 200 MA.
He knows interest rates much better than you do.
With the 21 coming in.
I want you to know that some of us here have been fighting
high risk,
to make sure that everybody understands the importance of the central bank. Every country dealing with crypto, their central bank is involved. But, of course, Trump and the opposite side of the aisle fought us. And that's one of the reasons we were not able to come together with a bipartisan agreement on stablecoins. You previously said that you would not resign if Trump asked you to do that. Do you stand by that commitment?
I have no changes to that.
I can't hear you.
Yes.
Oh.
Thank you.
Oh.
Please let the record record that adequately.
Oh
I appreciate that because you have a right to your position not to be interfered with by law, I believe, or even Constitution. When Musk comes knocking at the Fed's door, you going to let him in?
I don't have anything for you on that.
Would you like to tell us today that you won't let Doge into the Federal Reserve or have access
This is hot.
to the systems
This
and
is the hottest stuff on the internet right now.
I don't have any, we've had no contact, and I don't really have, I have nothing for you to report today on that.
Well, you know what happened at Treasury, and you know what happened over at the CFPB, and the people of this country are being violated because all of our privacy is being taken up by Elon Musk and Trump, and we don't know what all they have on us, our bank accounts.
We don't know what they have on us. Yo, she said it, yo. We don't know what they have on us. Oh, my God.
The last time you testified before this committee, you said, and I quote,
It's crazy.
Really successful.
Run that back, yo. Clip that. Yo, somebody clip that.
Are those that do
We
a
don't know
really
what
good
they
job
have on
on
us. Yo,
diversity
clip that
to
shit.
get the best out of
It's
people
so-
and attract a broad, diverse range of talents to the table. That is the way we feel about it. And at the Fed, and that is what we've been doing and will continue to do. Chair Powell, how will you ensure that the Fed continues to attract the best and most diverse employees?
We don't know what they have on us, yo.
Institutions like ours, private and public, are in a constant contest to hire the best talent in the country. And we've all learned.
I'm worried what Elon has on me.
that we will go anywhere to find that talent, and including places that we didn't go 25 years ago. And we'll just continue to do that. You know, we're recruiting, as you know, at many, many, many universities and colleges, including historically black universities and colleges, and others. And that's what we find, and that's our practice. We think that's the best way to go about it.
Thank you very much. And that's what I've always felt about the Fed. No matter what they call it, you only attracted and hired the best qualified people in your operation, no matter what they refer to it as, what they call it, whatever way they define it. Is that right?
Yes.
Thank you very much. Chair Powell, are you willing to provide my staff with an immediate briefing from your agency on the status of your OMWEs and equal employment offices?
Yes.
What?
Thank you. I believe that you know that the OMWEs were created with the Dodd-Frank reforms. It's in law. And as I understand it, any attempt to dismantle OMWEs would have to come before the Congress of the United States of America. Is that your understanding?
Well, yes. Section 342 of Dodd-Frank, which is the OMWE section, is the law.
Yeah.
Thank you. Chair Powell, to what extent have you consulted with other board members in determining how your agency is complying with Section 342 of Dodd-Frank and as well as any other federal anti-discrimination law?
I like this trade right here.
I think we've consulted with
I'm in this trade. I'm in the scalp. Stop loss below 93.
Quite a bit.
95, 370. Going to see if I can take it to 97, 96.9.
His inauguration, President Trump issued an executive order on digital assets, which includes a prohibition on central bank digital currencies, or CBDCs. The executive order banned any, quote, form of digital money or monetary value denominated in the national unit of account that is a direct liability of central bank, end quote. I'm concerned that this extremely broad definition could go far beyond CBDCs. Well, thank you very much. My time is up, but I appreciate your presence here today, and I appreciate your willingness to stand up for your right
Gentlewoman's
to be the
time
chair.
has expired. But
And I now yield back. Thank you.
But I do invite the chairman to respond to.
Some people may not agree with this, but I mean, at where she is in life, she keeps showing up every day. I may not agree with anything she says. But I always agree with someone's will to keep moving. Like somehow she keeps going. So I'm just,
You had talked a little bit about your.
I can always take something good out of
Obviously,
every
a lot has changed
situation.
in the last 5 years. Pandemic, inflation, higher interest rates, name a few. However, I believe your dual mandate of maximum employment and stable prices should remain the ultimate objective. I assume you agree with that. I let the record reflect slight head nod on that, I guess. This committee is going to be very focused on monetary policy, and with my good friend from
I'm not saying I condone anything. I'm not with it at all, but she shows up every day for years.
We're going to be addressing some of those issues. Chair Hill touched on some of the rules that have been discussed. I, for one, have always been particular to Taylor rule, but there's a number of rules. I know you go through those. At one point, I suggested that we could call it the Yellen rule with Chair Yellen, but there needed to be some sort of public declaration of what to benchmark against, and I still feel that that is of some importance.
The trade is 95.370.
You outlined your timeline on this particular review, but I'm curious, do you believe that the last policy framework limited the Fed's response to raising inflation, something that you and I have talked about over the years?
No. I'll tell you why we didn't raise rates. We thought the inflation was transitory. I can show you forecasts from the end of 2021 by us, by staff, by the blue chip. Everybody thought it was going to be transitory. That's why we didn't raise rates.
And I also distinctly remember a hearing where you and Secretary Yellen at the time were sitting next to each other, and it looked like you visibly scooted away when I asked you both whether it was still transitory, and you had, for the first time ever, a separate answer. Her answer was yes, it still was transitory. You gave a very Fed speak answer of, we no longer believe the data shows that. So no. And to kind of go to Chair Hill's point, we think that might have been a little late on that. Back to the review, I'm curious, what sort of input are you looking for from the public and from Congress as you go into that review?
So from the public, we'll do a series of Ed Listens events, which were very successful the last time. And it involves us sitting down and meeting with people, some of whom know a lot about what the Fed does, some of whom just tell you what's going on in their communities. It was really, it was a very successful part of our outreach last time. In terms of Congress, we'll keep you informed of our progress. We welcome anything you may offer. But it's a public. We're open to the public on this. It's a public review, as distinct from what we were doing before, and so we're welcoming views from all over.
And not to get ahead of the chairman, but I look forward to us having more conversations about that with the working group. I want to switch topics and focus a bit back to the working supervision. Michael Barr has stepped down from his position as vice chair for supervision, effective at the end of the month. And whether, frankly, President Trump fills that position is entirely up to him. But in the absence of a vice chair for supervision, you're still working, I think, on it. I think your quote to the chairman was, "There's no time for a holiday." Now, this vice chair of supervision is a Fed governor that has, frankly, extraordinary powers and responsibilities. And ultimately, my question to you is, does the Fed really need a separate vice chair to complete its work? Now, I got here after the 2010 election, 2011, shortly after Dodd-Frank was passed. I know this vice chair position was created by Dodd-Frank. I've just been dealing with the echo effects now for the last going on 15 years of Dodd-Frank. Do we really need to have a separate vice chair of supervision?
So for many years, as you know, we did our business without a vice chair for supervision. What that means is everything goes through the full board.
And it was effective?
I think it was, and also there was less volatility.
Explain that. Why was there less volatility?
Well, because you've got a group of 7 people on the board, and there will be some as appointments change. There'll be some changes in the approach to regulation.
You should also dump here.
Putting it all in a single person, admittedly, just to recommend to the board, can lead to sort of some volatility in these things, which is really
larger swings in policy.
Larger swings in the kind of things, and that's not great for the institutions that we want to regulate. We want to have a good set of regulations.
If you lose a yellow line,
it doesn't swing back and forth very much. The question of whether it's a good thing to have in the law is really one for you. But I will tell you, we will once Vice Chair Barr completes his term in a few weeks, we will continue on until there's a new Vice Chair for Supervision.
Wedge falls
and we can
down.
very much get our work done.
You
Or
bounce, you
if there
break
is
out.
one. So with that, Mr. Chairman, my
Golden
time has
cross on the
expired.
1
Thank you,
minute.
Vice Chairman.
Says we should pump.
Heisger yields back.
Moving
Recognize
averages
the gentleman
say
from
short
California,
squeeze
Mr.
coming.
Sherman, for 5 minutes of questions.
Chairman Powell, you are the only bipartisan person or thing left in Washington. You were appointed by Obama. Trump gave you a promotion. Biden reappointed you. And you are the only Biden appointee not to hear the words, "You're fired," from our president. So I hope we listen to what you have to say, because you're the only person or that I can identify in Washington that has support on both sides of the aisle. Mr. Huizenga mentions the importance of your dual mandate. Project 2025 calls for abolishing the dual mandate and eliminating a mandate that you focus on employment. If we were to give you just one mandate dealing with price stability and take away the mandate on employment, over the next 10 years, would our GDP be higher or lower?
It wouldn't be possible for me to say.
He's not going to answer that.
Does the fact that you focus on employment as one of your dual mandates lead to lower unemployment, higher employment in our country?
You say tool mandate?
It may do so. We do balance those things.
I would have sworn he said tool
To some
mandate.
extent, that may be right.
Chair Hill spoke about how important it is that you maintain your independence. I noticed that
flipping the mic.
in light of the hiring freeze, the Fed has removed all its job postings. I'm hoping that your personnel policy will be as independent as everything else at the Fed. But I'm more concerned with the president's statement at 7:58 this morning, where he said interest rates should be lowered. He said it. Will that influence what the Fed actually does?
I, as a practice, never comment on anything the president says, but I think people can be confident that we'll continue to
XCN
keep our
looks like
heads
it might
down,
get a
do our
pump here.
work, make our decisions based on what's happening in the economy, the outlook,
And
the balance of
statements
risks.
by elected
No
officials
change.
are not among the things that cause you
Only
to
need
act
to
one way or
interrupt.
the other.
He's the only
correct.
guy that interrupts.
Thank you. And he went on to say, he said interest rates should be lowered, something which would go hand
Let's
in
get the lights up
hand
to the watchers,
with
please.
upcoming tariffs. Let's rock and roll America. I certainly agree with the rock and roll America, but the Peterson Institute
Stop flipping the mic like that, man.
says that the policies that the president ran on will raise the CPI by between 4 and 7.5 points. And I think the biggest element of that is the proposed tariffs. If we have higher tariffs across the board, say 10 to 25%, would that increase the cost of living? And would an increase in the CPI or related indexes of the cost of living lead to higher interest rates?
You know, there are many organizations, public and private, whose role is to speculate publicly about what this might be. What we're doing is we're reserving judgment until we actually know what the policies are.
But if we have a higher cost of living, does that lead to higher interest rates? The CPI goes up, or CPE, excuse me?
Well, if inflation goes up in general,
Yeah.
forget about tariffs. In general, of course, we will use our tools, which is the interest rate, to bring it back down to 2% over time.
But you can't. You're never going to get it to 2%.
You told the Senate we're going to release the stress test scenarios before we implement them. Will you take a holistic look at large bank capital requirements, including the risk-based capital ratios like Basel III Endgame, stress testing, to make sure that you don't have a contraction in the ability of credit to Main Street businesses?
Yes.
Great.
This is
There's a
XCN.
proposal in Project 2025 that we abolish Fannie and Freddie. If there was no explicit or implicit federal guarantee for those who invest in mortgages, would that lead to higher mortgage interest rates?
Since you'd no longer be borrowing on the credit of the United States, in other words, so Fannie and Freddie would be privately funded, it could lead to that. I think privatizing Freddie and Fannie might have other virtues too, though, as has been considered many times by this committee and others.
Might have some virtues, but it would lead to higher mortgage rates.
It could.
The CFPB has been put on ice, but all the regulations remain in force. So if you're a bank that wants to comply with those regulations, there's nobody that can give you any clarification. So you don't know. And if you're a bank that doesn't want to comply, the next presidential election may put into practice a CFPB that enforces all the regulations that the Trump administration has tried to eliminate. Does that cause confusion for banks?
You're speculating about what the situation might be. I would say that it could.
If you're just jumping on in, I did take a long here.
Back. I now recognize myself for 5 minutes.
1 minute flag.
Let's talk about the balance sheet. As we've discussed several times before, the consistent and massive growth of the federal debt creates long-run challenges for both the United States and saddles future generations with an onerous burden. But it also creates a challenging environment for the markets as the Treasury market expands in kind. As the Fed engages in quantitative tightening, allowing the Treasuries to roll off, the Fed is careful to ensure that there are ample reserves for the balance sheet. Could you briefly discuss the conditions that determine the ideal level of reserves?
Sure. So let me say that we intend to slow, and we have slowed, but then stop the process of shrinking our balance sheet at a time when we think that reserves are somewhat above the level that we judge to be consistent with our ample reserves framework.
Like head and shoulder vibes
what
here.
What that means is we want reserves to be ample, meaning
if you lose the 208, this yellow line
suddenly appear to be shortages of reserves.
We're going to go down to test 94.7.
Where those shortages might appear, and we're going to put a buffer on top of that because nothing good happens when there's not enough liquidity. So that's our overall framework. And right now, we feel like all the evidence suggests that reserves are still abundant, which is more than ample.
As you know, in early 2021, the Fed stated that it would invite comments on the supplemental leverage ratio. That has not happened yet. I've made the point that the growth of the U.S. Treasury market paired with a decreased willingness of banks to act as intermediaries is a major issue on the horizon. When former Treasury Secretary Yellen was before this committee last year, I asked her about the resiliency of the Treasury market, specifically about the wisdom of permanently modifying the SLR. She said it's something that the banking regulator should consider. Does the Fed plan to finally look at the SLR?
So let's go, baby.
Yes, I believe we will. I have, for a long time, like others, been somewhat concerned about the levels of liquidity in the Treasury market. The amount of Treasuries has grown much faster than the intermediation capacity has grown, and one obvious thing to do is to reduce the effective supplemental leverage ratio, the bindingness of it. So that's something I do expect we will return to and work on with our new colleagues at the other agencies and get done.
Because I think my colleagues are aware that over the course of recent times, literally we have 8 times as much debt to process, but only half as many major market makers. The Federal Reserve is not immune to politics. You, like every Fed governor, go through a lengthy confirmation process in the Senate. And of course, you're required to answer to Congress in hearings like this. I can trace a major political turning point at the Fed to the passage of Dodd-Frank, which greatly expanded the Fed's regulation and supervision authority. Chairman Powell,
5 minute might pump hard right now.
Independence of the Federal Reserve's monetary policy function
I'm not a financial advisor.
Hindered by its role as a bank regulator. Can you do both?
Everyone hear that? I'm long on the 5 minute. You do you, though. I'm not a financial advisor. Nothing I say you should be taking as financial advice.
Clearly, the regulatory and supervisory side is more contentious in political circles. But we will continue to carry it out as best we can and to do so in a non-political way as best we can.
And clearly that'll be a major discussion topic in the task force. In my remaining time, could you discuss the Fed's 5-year review of monetary policy? What are the categories of issues you think that will be helpful to receive feedback on?
So a good part of it will be looking at the changes we made in 2020, which were made in an environment where we had been stuck at the effective lower bound at 0 for 7 years. And the highest we got our rate really was sustainably was 1.5%, and that was the highest of any advanced economy central bank. So the concern was that at the slightest downturn, we'd be back at the 0 lower bound and we'd be stuck. So we were looking for ways to make up for that. So then the question is, we got this inflation out of the pandemic and the events related to it. Are we in a different place now? And I think the chances are pretty good that maybe the effective lower bound is still a concern, but it's not the base case anymore. So we need to look at that and decide how what are the implications of that for our framework.
Thank you, Chairman, and I look forward to several more discussions on these topics. And with that, I yield back the balance of my time, and I recognize the gentleman from New York, Mr. Meeks, for 5 minutes.
Thank you, Mr. Chairman. Chair Powell, thank you for being here today, and you've indicated in past hearings that geopolitical tensions pose important risks to global economic activity. In fact, around this time last year when you appeared before the committee, you and I discussed how conflicts around the world, specifically the war in Ukraine, had impacted the cost of things like groceries in the United States of America. At that time, you indicated that the war had caused commodity prices to move sharply back home. Does that sound correct to you, familiar to you?
Yes, it does.
So just to reiterate, in this interconnected world that we live in, would it be safe to say that economic instability in other countries has the potential to impact economic factors here in the United States?
Sometimes, yes.
And so, given that fact, would it seem like a smart move for the United States government to remove one of our most effective strategic tools that, by mandate, assist U.S. commercial interests
XCN booming there
by supporting developing countries' economic growth and building countries' capacity to participate in the world trade? Would you agree with that?
It's not for me to be the judge or to say on that.
Well, we do know that a number of, like USAID, they buy a lot of their agricultural products, et cetera, from American farmers. And in fact, it helps the U.S. economy when you look at the volume of agricultural products that are being bought, so that we can continue to be a part of the rest of the world.
Actually, I can't say it. But
would that be correct?
I had a strange way to look at that. But.
So, you know, today we find ourselves facing a situation where the president and his Dodge buddy Elon Musk seem hell-bent on dismantling USAID, no matter the consequences, even if they are dire. To me, the assault on this congressionally authorized body represents an attack on the rule of law and should outrage every member of this body. Every member, Democrats and Republicans alike. And I know that your interest is squarely within your dual mandate and not foreign policy. I sit on both committees. I'm here, but I'm also the ranking member on the Foreign Policy Committee.
Wow.
And so I can't sit here today and pretend that what we're doing won't impact employment and economic stability right here in the United States of America. Weakening USAID will fuel global crises,
nothing to do with him,
endanger American security, embolden other nations like China
BNB telling us that Bitcoin's going to recover here, see?
And leave us here in the Trump administration
and then it's doing Bitcoin
solely responsible for the fallout. So I have to take this opportunity to urge my colleagues on the other side of the aisle to also stand up for USAID. Anytime we travel, we go visit what they do. We go visit the good that they do.
Wow.
We go visit what and how their economies improve so that they can be part of the global economy. So,
but cryptocurrency does that, though, better than that.
if not because people just care about the rest of the world, then because we care about our country and recognize that instability elsewhere threatens.
Giving people money is not how you help them. Teaching them how to empower themselves with money is how you help them. Dang.
An interconnected world, because the economy is interconnected around the world. We cannot isolate ourselves from the rest of the world. I thank you, Mr. Chairman.
That's what cryptocurrency is about. That's why we should have cryptocurrency laws that are, better for everybody.
Mr. Chairman, thank you very much. Chairman Powell, welcome. We're delighted to be here, and I hope that this comes
made a few good points there.
Greetings from every single member that we appreciate.
Like, that's a bullish speech for crypto right there.
Even though you're expected here.
We have the solution right now. We don't need the old ways.
And we admire you. Mr. Chairman, you and I both know that way back when, and we assume 21, that there was a decision made by the Fed that gets close to quantitative easing and then the term tapering. And we know that it was sold as a monetary stimulus to help the country, and I get that. There was about, in my opinion, $2.33 trillion that were taken out in loans. And Chairman just spoke a minute ago about the term debt versus growth. Debt versus growth, about this amount of money that sits out there on the debt side. Could you please take a minute and discuss this issue and how we should be looking at it? Thank you.
Sorry, Mr. Sessions, are we talking about asset purchases that we made during the...
We are. We're talking about when the Fed went and sold treasuries.
No, we bought treasuries.
Bought treasuries.
Yeah, we bought treasuries. So, it was a situation, I'll tell you why we did it. We were just out of the worst part of the pandemic.
How are you buying stocks? Do you see that? You understand that, right? They're buying stocks.
Very concerned. COVID is still raging.
So they can pull out and crash it when they want.
It actually,
they shouldn't be buying. They shouldn't be
into 22. But we wanted to we didn't want to stop buying treasuries too soon, because that has a stimulative effect on the economy, because we didn't want to provoke an unwanted tightening in financial conditions at a time when we thought the economy was still vulnerable. You look back in hindsight, we probably could have done that earlier and halted purchase earlier. In any case, we turned right around and started shrinking the balance sheet, and
you moved it from about 120 a month to 110.
Well, we're down now. We've been tapering for 2 years now, and we're down more than $2 trillion. So, and we're still going. So that's why we did what we did.
Tell me what that looks like.
They're selling securities. You understand that?
From aggregate versus
they're selling.
With what the chairman said.
Kind of crazy when you think about it.
Versus growth, because we believe the debt remains and the growth is not equaling that ability to pay it back.
So what happens is we borrow money to cover the spending that Congress has done. Our purchases don't affect that. We're basically.
But what are you buying? With what money?
Which is cash.
But you have no balance sheet.
We're retiring.
The Federal Reserve has a zero balance sheet. Am I wrong here? Am I wrong?
Long-term rates.
I've studied this for years.
And what are you paying?
They print money.
Long-term rates.
Market rates. We're paying exactly the market.
And what would that market be approximately a year ago or to now?
Well, the 10-year, we're not, of course, we're going in the other direction now. We're shrinking now, but
we are
buying, the 10-year was yielding a very, very low. The yield on it was quite low during the pandemic, extremely low, because, growth was slow. There was a lot of demand for treasuries. So we were pushing down rates to support economic activity. When you can't lower your policy rate anymore and you want to do more stimulus, that's really the main thing you can do. It's actually the forefather of that was Milton Friedman, who came up with that thought way back.
Been saying that.
$2 trillion?
Yes, we have.
Okay. And what do you believe remains, and you believe you're now stable for moving forward?
These are great,
So I think we have
quiet,
a ways to go.
Easy questions.
The level of reserves, which
that people don't realize,
hasn't really changed.
I'm long, man. Bitcoin's about to pump hard.
The overnight reverse repo facility.
Says my
I'd be happy to
I have a
spend
model
some
I play all the time.
this stuff is
90% accurate says it's going to pump
Yes,
right now.
I've tried to find
Maybe I'm wrong.
new data on it.
I'm probably wrong.
The last I found
I'll be
really
dumb on my
was a
face.
CRS report of 22. So what's
very,
called
very big changes since then.
127.22. And
Yeah.
so the changes that you speak of are important.
Yeah,
And so I would appreciate that time.
be happy to do that.
Great. I want to thank you for being here. The confidence that the American people have that we will turn not just the economics of their lives, but of the country is very important.
This looks more bullish to me now.
They spoke about the country, and I want to thank you for your service and time. Mr. Chairman, I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you very much, Chairman, and welcome, Chair Powell.
Sure.
Chair Powell, I'm worried about these tariffs.
Don't be worried.
And
That's
I
fear.
want you to
Don't live in fear.
kind of share with us
That's fear. You can be
your
concerned.
thoughts on
Don't live in
these
fear.
tariffs. I'm worried about it. I think the president is wrong here. Tariffs can cause a terrible situation to the economy. I'm concerned about the inflationary impact on tariffs. And where cost increases from the tariffs, there's a cost.
Always listen to the opposition
these
or to the other ideas. This is the point.
We need not move into this area blindly. And some of these costs will be absorbed by business companies, but there are other costs that will be borne by the American consumer.
But you don't know
We
that.
don't even understand this.
But you don't know that
Yet
either.
you have the president just using these tariffs
Let's do something different
as
for
a
once.
means of
Find out what
fight or
happens.
like a war.
Instead of doing the same
And
thing all
this
day.
is going to do it. Everybody is not going to be Mexico or Canada. And while we got a little time, I want your thoughts on the dangers of these tariffs. The stock
gonna say a word
market is
about it.
anticipating rate cuts. What will these tariffs do about that? Does the Fed see
Why are we
financial market
anticipating- what-
stability as a factor
Who
in
told you to
its
say this?
decision-making process
Sounds like
when considering the rate cuts? And here is specifically what I want you to get to. In light of the president, and politely I will say,
he's slowing the
his
eat pump.
ill-crafted tariff strategy, do you foresee future rate cuts as a result of inflationary issues or due to a weaker labor market? And what do you consider to be promising inflation data? That's our big fight. And these tariffs are going to just add to inflation like a rocket ship. Your thoughts?
So,
and share with us. Give us your opinion.
If you had any
there's a cost here.
complete understanding
what you think
of the
about it.
economic system we live in.
The president has certain authorities over tariffs. Congress has authorities over tariffs. The Commerce Department is involved in some ways, but the Fed has no role in setting tariffs. And we don't comment on decisions made by those who do have that authority. We try to stick to our own knitting. In this particular case, it's possible that the economy would evolve in ways that, because of tariffs or partly because of tariffs, that we would need to do something with our policy rate, but we can't know what that is until we actually know what policies are enacted. And remember, it's not just tariffs. There are significant changes to immigration policy, fiscal policy, and also regulatory policy. You put all four of those, and all four of those were things that the president was elected to do. We will then try to make an intelligent judgment about the overall effect on the economy of those, and conduct our policy accordingly. But it's not our role in any way to comment on the wisdom of the policies that are enacted by Congress or by the administration.
Got resistance C at 95, 92.
Well, he have an effect on whether or not you will resume your plan to
got a hold here. It looks like you're going to dump
interest rates this year, or continue to hold?
So we'll make our decisions as we go about what to do with interest rates based on the data that we see, the outlook, the evolving outlook, and the balance of risks. And we'll be considering all of those things. We won't be focusing on any particular policy, and I can't tell you.
Got to get a bounce. I stay long. We'll see what happens.
It will really depend. It's fairly uncertain environment right now.
Yeah,
the underlying economy is very strong.
You lose the 200, you're done.
But there's some uncertainty out there about new policies. We're just going to have to wait and see what the effects of those policies are before we think about what we can do.
Well, all I want to say, God bless you. I know your strength. We've worked together over the years on many things, and this nation is grateful that we have you, your wisdom and intellect at this time.
I agree, but the gentleman's time has expired. Gentleman back. Chair now recognizes the gentlelady from Missouri, Ms. Wagner.
I thank the chair, and it's good to see you again, Chairman Powell. Chair Powell, under the Biden administration, American families were hit with a huge stealth tax.
Here comes that dump then.
From, as we've spoken about, inflation.
You lose the yellow line.
Grocery prices and led to high rates on things like mortgages and
unless we can hold this yellow line here.
Since 2021, the average Missouri household is paying about $1,100 more per month due to inflation. To put that number into perspective, the median family income in Missouri is $69,000. These families have had to spend $13,000 more of their annual income on the exact same goods. What specifically is the Federal Reserve's plan for making life easier for everyday Americans?
So the best thing we can do for Americans is to vigorously pursue both stable prices and maximum employment. We're trying to get back to a long expansion where prices are stable around 2%.
You seem to be there on labor, as you've pointed out. So tell me what else.
Sorry?
You seem to be there on labor. So what else?
I would say we're close but not there on inflation. And you did see today's inflation print, which says the same thing. I mean, we've made great progress toward 2%. Last year, inflation was 2.6%. So great progress, but we're not quite there yet. So we want to keep policy
never get it to 2%
for now, so that we can see.
We're definitely not there for 30-year mortgages, upwards of 7%, Chair Powell. So let me
get to 15. People don't realize it get worse.
Spoken about,
no
and it was brought
up
prior colleagues here, that the federal banking agencies, including the Federal Reserve, should scrap the flawed Basel III endgame proposal and start over. You talked a little bit about how you plan to perhaps do that.
My model didn't play out, which I'm kind of like.
And a timeline potentially.
It's so rare that happens,
public,
but it is a bunch of malarkey
be able
today,
to provide comments on any revised proposal as required by the Administrative Procedures Act.
So I fully expect, and I think it's a good idea for the United States to finish Basel III in a way that's in keeping with Basel and also with what other jurisdictions are doing, comparable jurisdictions.
The key there is end game. This has been going on for 2 decades.
Where's the end already, right? So, we'll put all of that out for comment again and welcome the comments for all commenters.
I should make sure we're following the Administrative Procedure Act.
Oh, yes.
As you move forward.
We will.
Chair Powell, I understand you are interested in making the stress test scenarios that assess how a bank will perform through a crisis more transparent. As things stand now, while the Fed may make some information public, it doesn't show its math, which makes it difficult to assess the robustness and analytical rigor of the stress tests. Recently, the Federal Reserve announced that due to the, quote, evolving legal landscape, it would begin to take public comment on its stress test models and annual scenarios. Can you describe the changes in the legal landscape that have caused the Federal Reserve to suddenly seek public comment on its stress test regime and why it did not seek public comment from the beginning.
So we're an agency that's strongly committed to following the law as written by Congress and as interpreted by the Supreme Court. In the past few years, we've seen a string of administrative law cases from the Supreme Court which are dealing with different issues, but there's a common theme, and that is significantly less deference to the views of agencies as compared to those of courts. Also just a raised expectations for compliance with the Administrative Procedures Act. We take that very much to heart, and this is one of the things that we're doing because of that. And we feel the appropriate...
You can look at things like Chevron deference. You can look at the EPA ruling by the courts, and they are returning the power back to the people and the Congress, not the administrative state, not those agencies and rulemakers.
So because of those things, you know, we are putting, as you went through it, we're putting the models and everything else out for comment and taking similar steps.
Well, I'm glad to see that. I understand the Fed intends to complete a comprehensive review of its monetary policy strategy, tools, and communications practices. You mentioned that. What is the timeline?
We expect to complete our work and announce.
I do. I have a bidet in my house.
By the
yeah, I'm not like everybody else.
In the summer. Thank you. I yield back.
Gentlelady yields back. The chair recognizes the gentleman from Massachusetts, Mr. Lynch, for 5 minutes.
Thank you, Mr. Chairman. Welcome, Chair Powell. Good to see you. Thank you for your good work. Chairman Powell, the Senate just filed a bill called the Genius Act. I'm always worried about anything that comes over from the Senate with the title Genius in it. But it is an attempt to provide a regulatory framework for cryptocurrency. And in that proposal, which is similar in some respects to the House proposal, it would allow individual states to oversee issuers, and there would be no central federal authority. The idea is to disperse the responsibility from state to state. My concern, my overriding concern, is that with that spread of an expansion of crypto, and the president is 100% behind it. He just started his own meme coin. He's making a lot of money off of that, which is another issue. My concern is that the spread of an expansion of crypto will infect the traditional banking system because it's a volatile, speculative asset, and we've seen some very sudden disasters with crypto. I'm just wondering, are there any backstops that we can use, any firewalls that we can put in place that might insulate the traditional banking system, you know, because they have access to the discount window and they're FDIC insured. So there may be, you know, second order impacts if we have a collapse of a major crypto issuer. Are there any extra things that we can do to protect the traditional banking system?
Yes. So first, I would say there are really two things that are happening. One is banks are serving crypto customers, and we don't want to get in the way of banks serving perfectly legal customers as long as they understand the risks and that sort of thing. We don't want to single out any particular.
Are you speaking to custody?
Well, custody is more, the second thing is undertaking activities on their own, right? And in that case, I do think it's appropriate to you know, as usual, as bank supervisors, make sure that we understand and banks understand the risks that are involved in the activity that they're taking inside an insured depository. On the other hand, you don't want to go too far. You know, I think there were a bunch of disasters, as we all remember, and, you know, we don't want to, and we were reacting to some extent to those. You don't want to go so far as to, you know, overplay your hand on that. So I think we need to be mindful that many of these activities can very well be done inside of banks, and custody may well be one of them. In fact, in Fed-regulated banks, there are lots of crypto activities happening now. They've just happened under a framework where we made sure that the bank understood and we understood exactly what they're doing.
Right. We also have the example of, you know, Silicon Valley Bank and Signature Bank, First Republic Bank. One of the triggering events there. I mean, obviously the risk management was very poor in that respect, and They got on the wrong side of interest
wants
rates.
to pump, like they don't want to.
There were also some failures of issuers who had huge deposits.
Whenever you stay above this 200 MA, you got to look for longs. When you lose it, they played it right now.
Or maybe both of them.
I'm telling you, this is not easy. This is the toughest trading I've ever been through in my life.
Of their collapse caused a run for the exits.
I don't change my opinion. I trade the 200 MA. If I'm below it, it looks bearish to me. If I get above it, I flip. It's that fickle on the 1 minute. You have to understand that the 1 minute will predict the rest of the day. I'm not telling you what's going to happen. I'm showing you how I actually trade. I make money doing this, whether you believe it or not. It doesn't matter to me. You'll come here day in and day out and see it. Like, if this price stays above the 200 MA, I don't know why. Don't tell me why the algorithm does this. I wish I could prove it to you. I know it's confusing to you as a beginner. I know to you it looks like I flip bearish and bullish every 5 seconds, but that's the fact of a trader's life. You never know what's going to happen. You're trading chess against somebody. You don't know what they're doing. When they flip the king to the left, you now don't have the same chessboard. It's different. When they flip the king to the right, your chessboard has changed. Every second a candle moves here, the chessboard has changed. If you've been through 15 years of trading like me, your mind and subconscious mind will be so deep, so amazing, so full of details and unbelievable depths throughout the charts that you will be able to see things through the 5 second, 30 second, 1 minute. It will transcend to the 5, to the 1 hour, and all through to the weekly, and your entire mind will be able to transcend space and time. So leave me alone as I try to figure out my stuff. And if you can't laugh at yourself or you don't know how to, kind of do crazy stuff, like, calm down yourself. Shout out to everybody here on the live. Thank you for jumping on in. All right. So understand that the price action does flip and change at a heart's notice. All right. Just want to calm you down with the music there. So I just got to teach you. You're not going to understand at first. You're a beginner. Remember that. I've been doing this for 15 years. You're going to learn with me. Let the actual knowledge come in. Understand. Amen. You will be reborn. All right? You will be reborn. Just keep coming back.
And you've conceded that the Fed miscalculated on inflation and mischaracterized inflation as transitory in 2021-2022 time period. Given that inflation remains stuck above the Fed's 2% target, will you commit to scrapping the flexible average inflation targeting framework? And if not, why wouldn't you commit to returning just to a simple 2% target?
So we're just beginning the review. It'll be done, as I mentioned, by the end of the summer, and that's the exact question we'll be asking. I can't commit to a particular outcome. I need to respect the process and the views of the other 18 participants on the FOMC.
Yeah, I appreciate that, and I just hope that in that process that you and your colleagues recognize that framework allowed rising inflation to persist and allowed the Fed to mislabel it as transitory. Let me turn to bank regulation. In October of last year, I led a bipartisan CODEL to Basel, Switzerland, met with the Basel Committee on Bank Supervision.
I saw my model, just to let everybody know, I saw my model and I took it, all right? And it didn't play out. Like, that model is when the 21, you're above the 200 MA on the 1 minute time frame, right? And the 21 crosses and you get a flag. It's a very accurate model, plays out many times. And, today it just dropped and dipped and then they flipped it around. So it happens. Like, if, again, I'm not going to go back now. I traded my model. Now I'm going to sit and just relax.
Made it harder for large banks to, among other things, facilitate the smooth functioning of the U.S. Treasury market, including holding treasuries on the balance sheet. Couple questions. One is, should the goal of our bank capital rules, should it be regulatory harmonization internationally, or should it be American economic competitiveness?
I mean, clearly, the goal is to have a strong banking system that supports American economic activity and growth. That's the ultimate goal. What you get from Basel is a global floor so that the other banks can't run on less capital and sort of have a short-term advantage. That was the whole point of Basel, was to get everybody to the same kind of level so that there wouldn't be the race to the bottom.
And I see that utility, but I think the goal of our regulatory system should be America first, and it should be about American economic growth and competitiveness. But let's talk about the Treasury market issues. Obviously, we're issuing a ton of debt right now. In fact, according to BlackRock, we're issuing $573 billion of Treasury bonds every week. To put that in perspective, the entire national debt of Australia is $573 billion. So we're issuing Australia every week in this country, if you want to think of it that way. Would reducing excessive capital and liquidity requirements on U.S. banks for intermediating U.S. Treasury market take the heat off of U.S. capital markets and increase Treasury market liquidity and stability?
I strongly think it would help.
Well, I think that's especially an important comment in terms of your regulatory approach, because, as you know, maturing bonds were being financed at an average of near zero during COVID, and now they're about double the cost of the average of about 3.5%. So now is not the time to make it more difficult for banks to hold treasuries. Let me just drill down with a little bit more detail on this Treasury market structure issue. Do you agree that the supplementary leverage ratio and the enhanced supplemental leverage ratio, the ESLR, are problematic as they create a disincentive for banks, especially large banks, broker-dealer affiliates, to serve as intermediators in the primary, secondary, and repo markets for U.S. Treasury securities?
I do.
And so you would commit to reviewing the SLR framework to create greater capacity for our banks to provide liquidity in the Treasury market?
I think it's time to move on the ESLR. And, you know, we proposed doing so several years ago. We just didn't follow through on it. So I do think it's time.
Well, thank you for that. And finally, yesterday, during your appearance in front of the Senate Banking Committee, Senator Warren asked you about the future of consumer protection laws if the CFPB is abolished. Isn't it true, Chairman Powell, that prior to Dodd-Frank, consumer protection laws were implemented by financial institutions' primary prudential regulators?
Yes.
And so if there were a decision by the Congress and DOJ or whatever to repeal the CFPB, we could return the consumer protection law enforcement function to other financial regulators.
You could, yes.
Thank you. I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Texas, Mr. Green, for 5 minutes.
Thank you, Mr. Chairman. I thank the ranking member as well, and would like to associate myself with the comments of the ranking member. And Mr. Powell, I would like to compliment you for standing up to the president, for literally preserving the independence of the Fed. It was one of those pivotal moments in time. It would have been more than your simply resigning. It would have been the president taking control of the Fed with one of his Pluto puppets. Mr. Powell, I'd like to speak to you now about the process of collecting tariffs. When the tariff is collected, at what point does that actually happen? If we impose a tariff, product is coming into the country, where is that tariff collected?
Great question. I'm not an expert on that. I'm going to say the Customs Bureau collects it, but I stand to be corrected by anyone who.
I believe you're correct. That's what my research reveals. Permit me to extend this. When it is collected, it goes into a coffer. I believe we call that coffer the general fund. Is this correct?
I don't know, actually.
It does. The tariff goes into the general fund. A tariff is another way of saying tax, I believe.
Lost like 200
for many people. Is that a fair statement?
See, now it looks like we'll dump hard.
It is sometimes characterized as a tax.
So if the president imposes a tariff, which is a tax, and the tax is collected by some entity before it actually, on the product before it gets into the country, then the president is putting tax dollars into a general fund such that they may at some point, and these dollars, by the way, are coming from the consumer, at some point they may be used to cover some of the appropriations of this very House that the president has enormous control over. So in a sense, what the president can do is aid with the payment of what he would call a tax break, but aid with putting dollars in the pockets of his billionaire buddies that he collects on the tariff that the people in this country ultimately have to cover. I think that the president, while he seems to always avoid the question of how the tariffs are going to be dispersed, he knows that he can at some point use that money to help pay the taxes that he plans to return to his billionaire buddies. I think that's a very sinister way of doing business, to require the consumer to fund tax breaks. I think this president knows what he's doing. I think he believes that the very wealthy need more to do more, and that the poor can do more with less. I don't agree with it, and I will do all that I can to prevent it. I yield back the balance of my time.
Gentleman yields back the balance of his time. The chair recognizes the gentleman from Texas, Mr. Williams, for 5 minutes.
Thank you, Mr. Chairman. And over here, Mr. Powell, thank you. Good to see you.
How are you?
All right. The Federal Reserve recently withdrew from the network for greening the financial system, stating that its work had extended beyond the Fed's statutory mandate. While I agree with this decision, I still have concerns with how previous Fed policies may have discouraged lending to traditional energy sectors like oil and gas, and it should not be the role of the government and the Federal Reserve to be in the business of picking winners and losers. So my question is, can you clarify whether the Fed will ensure that financial institutions are not pressured to making lending decisions based on political or climate considerations rather than sound financial risk analysis?
I confirm that is not our policy. That would be inappropriate and absolutely not something we should be doing.
Okay, thank you. The Basel Committee on Banking Supervision intended for the Basel III Endgame proposal changes to be implemented in a capital-neutral manner to ensure a level playing field for U.S. banks. Following this intent, the previous Federal Reserve Vice Chair for Supervision initiated implementation efforts with capital neutrality in mind. However, his successor politicized the process, imposing harsher requirements that exceeded BS recommendations. And this approach not only made the proposal more difficult for banks and their customers, but also weakened U.S. banks' global competitiveness. Ultimately, he took his eye off the ball and went in the wrong direction. So, Mr. Chairman, will the Federal Reserve commit to conducting a more thorough economic impact analysis before finalizing any capital requirements to ensure that they do not hinder economic growth?
Yes.
Regulatory overreach disproportionately impacts community and regional banks, which do not pose systematic or system risk for yet they face many of the same capital and compliance requirements as the largest institutions. So many of these banks serve as lifelines for small businesses, rural communities, and the first-time home buyers. And it's key for the Federal Reserve to protect these institutions and ensure that they are not subject to one-size-fits-all regulations. So, Mr. Chairman, what steps is the Federal Reserve taking to ensure that new regulations do not force consolidation in the banking industry, therefore make it a little harder for smaller institutions to compete?
So like everybody else, we see the consolidation that's happened really over the last 30, 40 years, and community banks going out of business and just fewer and fewer banks. And we know that may be happening due to technology and various things, but we and also just people moving to cities and away from rural areas. But we don't want our regulation to in any way foster that. So we try hard. I try as hard as we can to make sure that we're not letting the heavier regulation that we apply to the GSIBs and even to the regionals slip down to smaller institutions that are serving their community and generally doing a good job at that. And we try hard to do that. This is tailoring. It's very much of a basic value that we have, and it's also what we're instructed to do under the law. And I won't say we're perfect, but we do keep this in mind.
I'd like to say thank you for being here. It's good to see you. And with that, I yield my time back, Mr. Chairman.
Gentleman yields back the balance of his time. The chair turns to the gentleman from Missouri, Mr. Cleaver, for 5 minutes.
Missouri.
Thank you, Mr. Chairman. Thanks to our very capable and courageous ranking member. Mr. Chairman, thank you for being here today. As you know, my words, the CFPB has been disemboweled over the last 10 days or so, which probably people, there may not be much concern here on the Hill in certain quarters, but there are two things that I want to ask you about. Rules over at CFPB must be from time to time updated. Right now, there is no system for updating any of the rules. And one of the other issues is that is there a regulatory gap, or are there regulatory gaps that you can see clearly, that people can feel, because there is essentially no CFPB for the first time since the end of the Great Recession?
So I don't think we know where it comes to rest. You may have seen last night that the administration nominated somebody to be the permanent head of the CFPB. So I don't know I'm not sure what the end intention is here. But if you assume that it goes away, then yeah, there would be a gap. There wouldn't be any federal agency that can examine banks above 10 billion, whether they're state member banks or state non-member banks or national banks. That would be the case. But I'm not sure we know I'm not sure we know what the end game really is here.
In terms of regulatory gaps that are created when the agency was essentially shut down. Now, I'm assuming that there's been somebody appointed to complete the murder of the CFPB, and so if I'm correct, that means that there are some there have to be, or either or they've been tricking us all these years that they were not doing any regulations. But that's my political position. I was very proud in my community to get the Hispanic Chamber.
Thank you, Paul.
And the Black Chambers to come together.
God bless you, Paul.
We got a building, they're functioning, big celebration all across my congressional district in Missouri. And then about 2 weeks ago, I started getting these phone calls, as I think many of us on both sides of the aisle have received. About 64% of small businesses have invoices unpaid for more than 60 days. And the Fed now, the Fed's real-time payment system allows individuals and small businesses to send and receive money instantly, which is a step in the right direction, Mr. Chairman. So what is the status of the Fed Now adoption for financial institutions?
So it's coming along, as was the case with ACH back in the day. It takes quite a while. There's investment that has to take place on the part of banks, and so we're working with with a lot of small and medium-sized banks to get them comfortable with the requirements of FedNow, so that this can build up over time. It's it's something that we expected to be slow in terms of uptake, and it has been a bit slow.
Well, is technology adoption a barrier for smaller community banks and mission-based lenders?
Yes, it is, and so we work with there are non-bank service providers that do reach out and do a good job with smaller institutions, and we encourage that. Those institutions can't actually have direct access, but their business is they have the information, and they can go to smaller institutions and show them how to do this, and that there's a lot of that going on. So, and we encourage that.
Thank you. Let me just say, I've been here on this committee for 20 years, and I've seen chairmen, Republicans and Democrats, and whether they are Republican or Democrat, they need to be independent. Thank you, Mr. Chairman.
Gentleman's time has expired. Gentleman yields back. The chair recognizes the gentleman from Ohio, Mr. Davidson, for 5 minutes.
Thank you. Thanks for joining us today, Chairman Powell. First, I want to reflect on our hearing on February 24th here in this same room. frankly, via Zoom for a lot of people because it was in the height of COVID. And during my 5 minutes, you felt confident that inflation being at 1.4% would stay under control and it wouldn't be an issue despite the very large increase in the supply of money. We talked about M2. In a subsequent meeting, frankly, in my office, we discussed Milton Friedman's quantity theory of money in depth, and you believed that it was no longer relevant, that inflation would not hit consumers. We debated asset prices during the hearing, and you claimed that the Federal Reserve's massive purchases of treasuries did not distort the market. Lastly, during the Biden administration, you were actively calling for more fiscal stimulus at times. And at some point along the way, more dollars chasing fewer goods seems to have actually resulted in higher prices. All of these things, inflated money supply, inflated asset prices, inflated consumer prices, happened on your watch. In light of the actual outcomes, have your views changed?
Well, I think we've learned a lot, but maybe not the lessons you think. But I do think we've learned a lot from the situation. We and essentially all of mainstream macroeconomics thought that this would be transitory. And and what that meant was.
But I know it wasn't transitory. I told everybody this, and I'm not as smart as all these people apparently.
It didn't.
I told everyone this wasn't transitory. I told you it was due to government spending and the fact that they were going to print money to zero. I said they've been doing it for thousands of years.
Going away and things were going.
I said fiat graveyard
under control, and you had achieved your soft landing. But the market pretty quickly spoke. I mean, frankly, rates went up over 100 basis points where you guys were going down. And now, in today's reports, we see that inflation's actually trending up quite a bit from where it was in the fall. So, again, would you, in light of the facts, would you reassess what you're doing with the central planning?
You're right that long-term rates went up, but they did not go up because of expectations of higher inflation. There's no evidence of that. It's actually different things. It's not about inflation.
Well,
look at markets. Markets are pricing in break-evens. I'll show you the. So chart.
the markets don't believe there's increased risk with massive fiscal spending in the market, and they're not demanding a higher premium because there's more risk.
More risk, yes, but not more risk of. It's not mainly about.
And when you see asset price inflation and rate inflation, doesn't that result in consumer price inflation?
It's not a question of that. You're saying that the rate increases at the long end are caused by expectations of higher inflation.
They certainly influence the inflation.
That is largely not true.
And if they don't influence the inflation, why do you guys try to steer inflation by controlling the rates? I mean, the reality is you've got pressure, including from the president, to lower rates. Are you going to be able to get lower inflation with lower interest rates?
I think our policy's in a good place. I think inflation has come down from high levels to 2.6% last year.
Oh, God.
My colleagues and I are
it's at 3% today.
Where we are awaiting further evidence of inflation.
A lot of the data that you guys are looking at lagged, just like when you said it was 1.4% and everything's fine. I think a lot of people said, it's not fine. You got to go out and talk to regular people. And constituents in Southwest Ohio, just like all over the country, aren't saying they're fine. And they might go that the rate of increase has slowed down a bit, but they know that the prices aren't going down. They're still getting hit pretty hard. And meanwhile, you guys still continue some of these policies, like you're paying banks still not to put their capital at risk in the market. Interest on excess reserves going back prior to the 08-09 financial crisis.
Paying banks not to put their capital in the market. You hear this?
Now you're paying them for an unlimited amount of reserves that they want to hold on it. To what extent is that distorting the market by pulling capital out of the market?
None, not at all. You're right, though. People are unhappy about the price level, and that's what we need is several years of real wages moving up higher than inflation.
Okay, so if they're having no impact at all, why is the Fed paying the interest? What is the rationale for the policy? Is it monetary policy or is it regulatory policy?
It's how
because as Chairman Barr pointed out, you guys are effectively gold-plating the standards, and the U.S. is actually holding way more reserves than we're required to. And part of that is IOER.
So what's your question?
If it's not distorting the market, and what's the purpose for doing it? What if it has no impact on the market? Why are you doing it?
It's the way we control. It's the way we exercise interest rate control in the market. I didn't say it doesn't.
Because it has an impact. And so I will have questions for the record, and I yield back.
Gentleman yields back. The chair recognizes the gentlelady from Ohio, Ms. Beatty, for 5 minutes.
Good morning, Chairman Powell, and thank you for being here. I want to thank you for your leadership at the Fed over the last 7 years, which I've had the pleasure of being here that entire time. Under both Republican and Democratic presidents, through an unprecedented pandemic and certainly an uncertain economy, your apolitical guidance is a testimony to the historic independence of the Federal Reserve, which is absolutely essential for you to carry out your mandate, keep prices stable, and achieve maximum unemployment. Over the last few years, inflation, as we all have witnessed, has come down from a high of 9.1% in 2022 to about 2.8%. During your tenure under President Biden, we saw the unemployment rate drop to a staggering 3.4% in 2023. Its lowest rate that we've seen in some 55 years.
Real quick, if the 5 minute gets above the Tutoring here, we can get a big pump.
Which is still low.
If it gets rejected, we just dump again, and we can't get above this resistance. So,
and American families, as we've heard throughout today, are still struggling to pay for expensive groceries and gas, and the list goes on.
I wouldn't trade this at all if I were you, if you didn't have a plan.
What the Fed has managed to achieve over the last few years. Chairman Powell, while I have sat on this committee, you and I have frequently discussed the importance of representation at the Federal Reserve and the benefits of recruiting the best and the brightest that this country has to offer by broadening the talent pool. The Fed has been a great partner to this committee on this issue, which, as everyone knows, has been very personal to me. However, the White House recently attacked on these very basic concepts are incredibly concerning to me, as many of my Democratic
Come on, baby. Let's go.
So I'm just going to ask and enforcement agencies to maintain offices dedicated to recruiting from a broad talent base and fostering an inclusive workplace. Yes or no?
Yes.
I am pleased to hear, as my ranking member mentioned OMWI and also talked about implementing it under Dodd-Frank Section 342. But I also am pleased to see that the Fed recruits from Ohio schools, and I'm from that great state of Ohio. Institutions like The Ohio State University or Case Western Reserve University, Denison University, Kenyon University, and Oberlin. Do you agree that hiring the best and the brightest, whether it's an economist, whether it's an analyst, a lawyer, a researcher, or IT professionals, that this country has to offer means that you don't have to recruit just from Ivy League schools, but you can find these individuals, whether it's an HBCU or it's also a state school? Have you found success in recruiting from those universities?
Yes, we have.
Thank you. Do you agree that these recruitment programs at their core do in fact prioritize merit and skill and simply expand the pool of candidates being considered?
Yes.
Do you agree that the Federal Reserve has directly and concretely benefited from initiatives to attract, hire, and retain a highly skilled and diverse workforce?
I do.
As I mentioned at the top, the United States economy has come a long
cannot seem to get back above 96,000 is resistance here.
Hardworking families
96K resistance.
Last night I was in a store, night before last, eggs here in Washington, D.C., $14.99. So I am
what kind of eggs were you buying? Like the most organic? Come on, man.
Branch would impact the Fed's dual mandate. We're seeing reports of course, from the Department of Government Efficiency's attempt to conduct massive layoffs. Do these policies, whether you agree with them or not, affect the labor market, unemployment in the United States economy? And how does the Fed plan to achieve maximum employment during these circumstances?
We have 170 million people in the labor force. So these are, they would affect the numbers technically, but it's not clear that it would be material.
Okay. Thank you, and my time is up.
Where is she paying $14 for eggs?
Being here.
How many eggs?
Gentlewoman yields back. The gentleman from Georgia, Mr. Loudermilk, recognized for 5 minutes.
Well, thank you, Mr. Chairman, and Chairman Powell. Thank you for being here.
Thank you, Buckley, for lunch on me. Thank you. Appreciate that. God bless you.
Spend just a moment on data privacy. I find it very ironic that my colleagues on the other side of the aisle and the ranking member in her remarks take a sudden interest in data privacy, and especially information regarding individuals' transactions, when in the IRA bill, they worked very hard to force banks to report
golden
the financial
eggs
transactions of individuals at $600. However, data privacy is something that I have been very serious about since I've been here. I've been fighting the Securities Exchange Commission with their unconstitutional acquisition of PII from individual investors. We're attempting to reform and modernize the Bank Secrecy Act to limit the amount of information taken from individuals. And, they often turned a blind eye to the abuses by the CFPB. But it's encouraging to know that they're finally interested in some level of data privacy. I bring that up because there's something about data and data security.
Short squeeze to 97,000. Come on, baby.
The U.S. Department of Justice announced that it was prosecuting a senior Federal Reserve official for economic espionage.
Squeeze it.
And this just came out in the past few days. This economist, who apparently had access to
Jerome touching his
monetary
mic.
policy documents, allegedly provided non-public information to representatives
Albatross
of the
eggs,
Chinese
yeah,
Communist Party. And I know you're limited in what you can share about this case in a public setting, but to say that I'm concerned would be, as others, be an understatement. In what you can share with us, if you will, please answer
debt wilders, debt twillers.
Do you know what kinds of sensitive
debt wilders or debt twillers?
Information would this individual have access to in his role at the Federal Reserve?
Him personally, no, I don't. I mean, honestly, I really don't know the facts of the case.
Steve-O got sacked on that short.
Okay.
Don't short the 200 MA, man.
Just assuming certain types of information
Not a good
from the
look.
role he's in, is there any idea if information was provided to the CCP, what advantages would that give them?
Look, when we crossed the 1 minute.
Without knowing what it is, I can tell you what staffers generally get, which is kind of the economic analysis that we do in advance of an FOMC meeting. And,
this could make our children dumb. This could just keep us moving.
As transparent as possible. So
let's moon, baby.
I don't want to sound like I'm dismissing this case, which we take very, very seriously, just as you do. But
so I got to stop the break even.
The truth is, what we have that is secret is knowledge of
up
what
127
we're going to do in the future, and in modern central banking.
Let's keep going, baby. Let's run this.
Transparent about what you're going to do. So
let's make some gains here.
We take this case very seriously.
So
you can't lose any money on this one.
And I appreciate it. And this is not adversarial at all. I'm really just trying to get to what possibly.
I'm going to get my money's worth out of
this. If they've done anything
out of this meeting.
With it. Of course, if you're unaware of
run this, baby, 96,000.
You couldn't answer that question. But
up 12%.
Does the Federal Reserve have an insider threat program designed to combat this kind of espionage?
Get this palm.
So we have very, very strict information handling requirements. We do background checks on every Federal Reserve employee when we start those before they start working there. We do everything we can on this, but
obviously certain things do happen and people slip through the crack. Do you see that does this open the door for a more strategic analysis of the Federal Reserve and how to protect critical economic information?
Yeah, I do think that, once we see this unfold a little bit and know what the facts are, I think we'll absolutely look and make sure that our controls and that employees understand the consequences of this, and I think they do. But, with a few thousand employees, there's going to be one sometimes that breaks the rules. And I can't comment on this case, but
and I understand it's sensitive. But as things move forward, I'd ask if you could, at some point, share with me and this committee more information so we can work with you to make sure that our nation's policies are kept just to those, more so kept away from our adversaries. And with that,
pay the trader. Pay the trader.
Gentleman yields back.
Almost back
Gentleman
up.
from
So we lost 200
California,
in the first trade. Back on it right
ranking member
now.
on our monetary policy
Basically got
task
our money
force right
back.
now
Let's
for
see where
5
we can go.
Thank you very much, Mr. Chairman. Chairman Powell, thank you. I don't want to insult you in any way, but I hear you're a deadhead.
I'll own up to that.
So I assume that with a few words, oftentimes you would know one of the songs of the Grateful Dead. So I'm going to give you here a quote to see if you know who said this. The risk of a dispute over the position could be a distraction, to our mission. Do you know who said that?
No, I don't.
Michael Barr did.
Oh.
And I would be remiss if I didn't say and mention that what Governor Barr did recently was very selfless and noble. The rest of that quote, by the way, is, in the current environment, I've determined that would be more effective in serving the American people from my role as a governor. So I think he himself took the position that it would be a distraction to continue in that role. I personally think he's
Jerry Garcia said
a great distinction that always managed himself in a way that was appropriate, and I appreciate the role that he played. I didn't always agree with him. He was always agreeable and certainly was able to communicate with him our disagreement. And again, I just want to thank him because I think what he just did is what a lot of people can't do, and that is make a decision that for the betterment of the situation that we're in for our country, he would purposely do something that wasn't necessarily beneficial to him personally. But anyway, I'd be remiss if I didn't thank him. But since I am asking tough questions,
get on with it, bro. Get on with it.
Did you know this one? Do you know what
when
the
I hear it, I listen to your voice.
Speedy is?
Oh, whatever. Might learn something.
Okay. You might know it in English. It's called the Bridge of Sighs.
Now we're ripping,
Are you
dude.
familiar with the Bridge of Sighs?
Rings a bell.
280.
Okay. In Venice, the Doge, who was the leader of Venice, had a palace. And across the palace, he had his prison. And oftentimes, a prisoner would be taken into the palace and interrogated in a very rough way, and then be tortured. And then after he confessed to something he normally didn't do, he would have to walk over the bridge and then into the dungeon and oftentimes die there. However, before he completed the task of crossing the bridge, there are 2 windows there. And he would stop at the windows and he'd look out over the magnificent city of Venice.
Oh, the 1 second chart.
And it's the last time, oftentimes, that person would get to see.
Oh, the 1
Venice.
second.
And so he'd sigh.
Look how we're getting massively paid right now on the 1 second. Oh my gosh.
Del Suspiri.
Bam, we hit the target, baby. I'm mad with it.
Crossing this bridge.
I'm mad with it.
Last time they've seen
dude,
the beautiful America that we've
Come on now.
And
come on now. You just saw beautiful, beautiful. Look at that. I traded the 1 second, road to the stop.
They're
like,
worried about the balance.
You can't beat that, baby. We banged on it to the upside. Oh, Sammy Capenendi. He did it again.
You can't fire me. I'm staying. Did anyone appeal fire you?
Anyone?
How did I do it? I don't know.
No single person can.
No single person can, right? I hope you continue with that independence, because I think at this moment it's very important. Someone mentioned it earlier, and I think it is very, very important. So,
yeah, baby, let's get
out
back.
of the way, I did want to talk about the dual mandate, especially the employment issue.
1 second chart, ripping.
For a lot of people in America, their job really is the most important thing for them. Not even their investment, their job. And that's why employment is such an important position, I think, and so important to be part of the dual mandate. Are you looking at changing in any way the dual mandate?
Boom, look at that.
We don't have that authority.
Above the 200 a day. I'm teaching you the ways. Just
Congress.
trust me. It wasn't easy.
Only Congress?
I battled it.
Well,
but we made it
Congress
through.
would have to pass a bill, which would be signed by the president.
Say that again, sorry.
Congress would need to pass a bill to change
This thing's going to
dual
moon.
mandate
Look,
that the
we're
president
squeezing
signs.
these shorts now
That's right.
hard.
And so I hope that you maintain your independence. There's a dual
This guy, we didn't need to listen to him. The
and
next
that's, I
person.
think, very, very important to most Americans. And with that, again, I thank you for your
I mean,
service.
I want to give every individual that God made the moment.
Continue to
So
serve.
God bless everybody. Even if I don't agree with them, I keep high
Chairman, I yield
frequency
back.
for all.
The gentleman yields back. We recognize
that. They
the gentleman from
spoofed
Middle
it.
Tennessee, Mr.
That was
Rose, for
spoof.
5 minutes.
That's why you can't go by BOOKMAP every time. You got to trade the Sam
Thank you,
way.
Chairman Hill and Ranking Member
The
Waters
lifer
for holding the
vision.
hearing today. And
That's
thank
going
you,
all the way
Chair
to the
Powell.
target.
Always good to see you here with us.
Oh my
Chair
gosh,
Powell,
what a
you
trade.
may recall the last time
What a trade.
we spoke, I brought up the issue of credit risk
again.
transfers, CRTs,
And I did
urged
it
you to
again.
allocate more resources to ensure that to ensure that framework applicants were receiving decisions from the Federal Reserve. I've recently heard back from stakeholders that they are receiving decisions from the Federal Reserve CRT applications. I hope that the Federal Reserve team continues to be focused on cutting down the backlog so that financial institutions can take risk off their balance sheets. Thank you for that. However, I still have concerns that we are not fully optimizing the use of CRTs. In the case of mortgage risk, CRTs have successfully shifted risk from taxpayers to private capital, including capital markets and global reinsurers. While government-sponsored entities have clear regulatory treatment under the Federal Housing Finance Agency, financial institutions lack similar clarity, particularly under Basel III. I understand that the Federal Reserve has begun to provide guidance, but more is needed to ensure that financial institutions can effectively manage risk, stay competitive globally, and serve their customers.
I'm going to pause him for 1 second. A CRT is a credit risk transfer, which is a mechanism used by the banks to transfer or distribute a portion of their mortgage credit risk to a third party. This practice helps banks manage their risk exposure and can involve the insurance of securities like Structured Agency Credit Risk, a STATSR, and Connecticut Avenue Securities, CAS, Credit Risk Transfer Program. So he's talking about CRTs, credit risk transfer, where the bank can transfer some of that risk to somewhere else.
Chair Powell, do you believe that there should be financial stability and competitiveness in this space?
Again, I'll take back your feedback, and that is our objective: is to be timely and thoughtful in that work.
Thank you. I appreciate that. In April 2024, Synapse Financial Technologies, a fintech company that provided banking as a service solutions, filed for Chapter 11 bankruptcy. This event significantly impacted its partnerships with various fintech firms and banks, including Evolve Bank and Trust. To this day, I have constituents in Tennessee's 6th District who are not able to access thousands of dollars of their funds, and there has been no communication regarding the timeline for resolution.
That's scary.
Chair Powell, since the Federal Reserve Board is a supervisor of the Evolve Bank and Trust, could you provide any updates on what you're doing to ensure that my constituents receive their funds and the
They asked him to ask that today, and he did what he was supposed to do. See? They voted for him, and they said, when you get there, please ask us about our
As
money.
their supervisor, as you point out, we've been pressing that bank to get money back to their
squeeze
customers.
is huge.
We're actively engaged with the bank as they take steps to
Going to
do so
98K
return
is,
that money.
look at going to 97.6 is my target.
The complaints that we've heard,
Rippage.
aware of concerns.
The target is just your measured move, the base of this triangle, my
and to the
friends.
extent they're violations.
And if you get above the 200 MA, you long. If you stay below it, you short. It's that simple.
And are there any specific steps that my constituents could take to expedite the process or ensure that they receive their rightful balances?
I'll have to come back to you on that. There may be. I don't have anything for you though on that today.
Thank you. And Chair Powell, is there anything else that the Federal Reserve Board is considering to prevent situations such as this on a going forward basis?
Well, I think when we see things, it's a lot of pattern recognition. So we'll be looking to avoid things like this happening in the future.
All right, thank you. I think there has been a lack of appreciation for
What
the
if they
work
do it in a
that,
different pattern?
President
you won't
Trump
recognize it.
has done to restore the American workforce. It is his example of calling federal employees back to the office that we are now seeing corporate America follow.
That's the best
as well.
solution.
Chair Powell, as the federal government and companies move to end work-from-home policies and bring employees back to the office, how do you anticipate this shift will impact key economic indicators such as productivity?
We wreck the shorts.
Urban commercial real
We wreck the
estate
shorts.
markets and consumer
We
spending
wreck the shorts. We wreck the
That's a really good
shorts.
question. I'm not sure of the answer. I've always felt that I am personally more productive in the office. And
Sorry,
that's
all
where
the
I work,
shorts.
except on weekends when I work at
I
home.
wouldn't cry for you guys.
But in terms of productivity, I think there are different views. I know a lot of CEOs feel strongly that people are more productive in the office, and we'll just have to see. I also think, though, that, you know, on the other side, work from home did allow very high levels of labor force participation among, for example, women. We had all-time record high participation by women. So I think there are benefits from work from home. I hope we continue to realize those.
Gentleman's time's expired.
I watch this flag now on the 1 minute.
Illinois.
Good time to sell. You're away from that 21, but we could make a nice flag and continue here to the upside.
Subcommittee, Mr. Bill Foster, 5 minutes.
Let's get back above 97.2, my weekly support of resistance.
Thank you for everything you do. I just like.
And remember, I bought the bottom today.
Sort of level setting on what
in my trading group this morning.
It's my understanding that your Inspector General in the Federal Reserve has not yet been fired. Is that correct?
That is correct.
Okay. And you've not also had high-level resignations of senior personnel as they've had in Treasury? Nothing like that. So
no, nothing like that.
As of yet, no.
The red line is the point of control.
You know, junior personnel
the point of
given
control.
Administrative access to your systems, your technical systems.
Might be a high volume
You're talking
node.
now about the payment systems that we
look at this nice pump here.
Technical systems.
No.
Email
looks like they're going to squeeze it up to 97.8, 98,000.
So far, you've not suffered through what Treasury has. Have you had any inquiries from other central bankers or commercial bankers from around the world about, you know, what?
They tried to false move it. Sammy caught him. Sammy caught him, baby. Sammy got him. They got me, but then I got them, and then I won, baby. I won this one.
I haven't.
Trying to get me,
they
though.
haven't called you up and said, what the heck?
I thought about Crypto Billy, and I said, you know what? Crypto Billy knows I'm going to win no matter what. I really did. I on my life, I sat there and I was like, man, I lost in front of everyone. I said, you know what? Crypto Billy knows if I keep pushing, I'm going to win. And I heard you in my head, Crypto Billy, and I kept pushing, man.
Unknown software being installed.
God bless you, man.
I haven't had any.
Thank you for the strength. Sometimes someone else can give you the strength. That's why you keep strong people in your life.
You know, we've also seen calls to resumption of calls to audit the Fed. All right, which is, you know, as you can remember from that gentleman up on the wall there, this was a big theme of, and you know, first off, the Fed does get audited, correct?
We are audited in the sense that everyone understands that word to mean, which is we have a Big Four accounting firm who looks at our books and gives us an opinion, does an audit, and publishes that opinion. That's all public.
Yeah, right, and it's my recollection there have never been any big problems uncovered in
No, we actually have quite a simple business model, although we have a large balance sheet. We're like a big community bank, only with no credit risk and very simple.
But how are you a bank if you don't have a balance sheet?
Fed is
fully audited.
It makes no sense. But what was really meant, you know, certainly during the time when we were talking a decade ago, I guess.
Inform me, maybe I don't understand.
It was really all about micromanaging Fed monetary policy. That they said we want to
watch this flag now on the 5 minute. If the 21 can reach, we stay above that smooth. There's a chance for more pump here.
Do you have any indication of whether the resumption of calls?
As someone said, 3 white soldiers on the 5 minute time frame.
Audits or some new
has been confirmed.
To politically micromanage
a continuation pattern of candles.
I have no way of knowing. Really what it is the GAO is free to work on every area of the Fed except monetary policy and does so. We have GAO reports, all over the place over many years, but they don't audit monetary policy. And, what the threat would be if that were to go away, you'd have investigations into decisions on monetary policy, and that would be a different thing. I think it was designed by its designer to be a step on the way to eliminating the Fed.
That is correct. Yeah, the calls to end the Fed came from the same wing of the Republican Party, and I guess still exists. I think we're up to something like 20 Republican sponsors of the end of the Fed bill. Let's see, I was sort of surprised to see that the word tariff only occurred twice in your monetary policy report, whereas if you look at financial trade journals, it's mentioned 5 times above the fold for those that read hard copies. So, this must be a very hard thing for you to deal with because, as you're aware, Trump's tariffs and other trade policies put us in a manufacturing recession a year before COVID hit. And so this is not a small thing if these resume. But you have to sort of filter out the chaotic noise and the guidance that varies hour by hour or week by week. So how do you actually filter that? You say correctly that, well, let's wait to see what the actual policies are. But then that depends. If you listen, one day you get, these are the actual policies. At some point you have to feed these into your macro models of what happens. And how do you do that filtering when there's just so much random noise on the signal?
Well, I think it's straightforward now in the sense that no one knows pretty much what the exact policies will be. That's still evolving, and so you can't really take action. You can do analysis of various hypothetical things, and we've been doing a lot of that. But ultimately, it matters what happens. What's tariffed, for how long? Are there substitutes? There are many questions that will have to be answered, and even then, the question will be how much of that will transfer to the consumer. As you know, that can fall on the exporter, the importer, or the retailer, or the consumer.
Or in my case, manufacturers are on both ends of this.
Yeah. So we really just don't.
So if that sort of analysis,
Gentleman's time has expired.
Congress, it would be great.
You just want to have a conversation?
The gentleman from South Carolina, Mr. Norman's recognized.
That's pretty
for
what are
5
you
minutes.
doing out there, man? Again, as I said, that was a great place to close the trade. Now we watch the 1 minute make a flag. If the 21 can come to price action, stays above the 200, we have a chance for continuation of a pump here.
In 2011, Vice Chairman Yellen made a statement about
99,264
about the long-term debt situation and the imbalance that we have with our budget. In the fourth quarter, when she made the statement, the federal debt held by the public was, as a percentage of GDP, was 64.75%. Now, the same debt to GDP as identified by CBO was 99% at the end of 24. Do you express the same concern that Ms. Yellen had about the severity of where we are with our continued long-term imbalance?
I have done so on many occasions. And essentially that the U.S., we're on an unsustainable path. And the debt level isn't unsustainable, but the path is sustainable, and certainly it's past time for Congress to work on that. But that's what I can say. I can't say more than that.
What do you think the benchmark would be? We're in the middle of the budget situation now, trying to debate, particularly with reconciliation. What would you say is a benchmark that would ease? What level of cuts, in your opinion, would ease your concern over what we're doing? We're $37 trillion now, but when you add the the mandatory spending we have on Social Security, as examples, going bankrupt in 35, Highway Trust Fund running an imbalance. What level do you think will give you, I guess, some assurance that we're going to get our house in order?
So I don't have a specific number. It wouldn't be appropriate, but I will say this. In having looked at this, the successful programs to get back on the right track, they tend to make progress over a long period of time. And in other words, you've got to get to a place where the economy is growing faster than the debt, and then you need to stay on that path for 20 years. This is not the kind of thing where we can fix it overnight. No. You just need to be making progress. And, right
1 minute looks pretty good for a possible continuation. I see 98,000. Big short squeeze coming here for Bitcoin.
Start moving.
We played it correctly. They tried to play us. I stayed on point.
So the key thing
I'm telling you, man, I stuck to my guns and I was able to figure it out.
Issue, and then
not my gun, but
together.
I stuck to my instinct.
Are things that can only be done on a bipartisan basis. Only. These are the things that need to be dealt with, cannot be dealt with by one political party. I'll leave you with that.
It's going to be a tall order.
It is.
To get bipartisan.
The order only grows. It gets taller every year.
Yeah, it does. That's one of the issues we're having now.
That's Southern talk now.
The level of growth, you think, with what President Trump is doing with giving Americans confidence with the Doge Commission, which is giving Americans hope that we're seeing things that are being spent of the taxpayers' dollars that we never imagined that we couldn't get to. Now he's exposing that. What level of growth do you think, with the confidence growing under Trump, that we will be able to reach?
He won't comment on
this year and the years after, because the 20 years you're talking about, we've got to have a pretty solid. It can't be. It's got to be. Would you say 1.8, 2% growth of GDP?
For a long time, people thought that U.S. potential growth was a little bit below 2%. I think we've had we've had 5 years of good productivity growth, and we hope that'll continue. If that does continue, then it might be 2 or 2.25. If you're talking about long-term budget assumptions, though, I'd be conservative and say 2%.
You think that's doable?
2%, yes.
On another note, the stress tests that banks run and that public has been given information.
It's such an oversighted projection. So many things have to go right or wrong.
Why
right?
is it not further? Why is it? Most people don't understand what it is. Why is it not broadcast more?
Flag out your 1 minute time frame.
Stress tests.
Correct.
Watch the 21-day moving average. That's your key today right now. Look for that short squeeze up to 98,000. BOOKMAP telling us there's a huge wad of liquidity up there about to get smacked.
Because in a way that felt like giving the test in advance.
Just likely what's going to happen here.
Initiative.
It doesn't look amazing for the shorts. At the present moment in time, it could all change.
Generally. But over time, the argument for not giving away the models, giving the models out, has, I think, weakened. And also the law has moved. The Supreme Court has moved to reduce the level of deference given to agencies and increased our obligations to be transparent under the Administrative Procedure Act. And so it's time we disclose the models.
Thank you so much.
Thank you.
Thank the gentleman. Gentleman yields back. The gentlewoman from Texas, Ms. Gonzalez, is recognized for 5 minutes.
And you're
Thank you, Mr. Chairman. And thank you, Chairman Powell, for joining us.
No trade right now. We're just watching consolidation on the one. You do not have to force
the United
trades.
Kingdom, European Union, Mexico, Brazil, India, and Japan all allow non-bank payment service providers access to their instant payment services. This allows improved access to liquidity for users, and they can send and receive payments instantly.
Let's go.
Without waiting multiple days. Does the Federal Reserve plan to allow non-bank payment service providers access to FedNow payment rail?
We don't plan that right now. What we really want to do is to have the consumer not care. You know, the consumer can have an access, but our payment rails go through
never
the banks.
counter trade.
So
Sammy Cup and Andy over here. I'm going to get you. I'm going to get you. I'm going to take you out of here.
Not that I'm aware of.
Get him out of here. You and you, get him out of here. I seen this guy and that guy over there. Get him out of here.
Index reading would cause you to cut rates.
It's this one, huh? I seen him in the corner and the other dude over there talking to the bro. Yeah.
2%.
Get him and get them to get him out of here. I don't want to see that guy again, huh?
To see in CPI for
crying out loud. Ruin my spaghetti over there.
At rate cuts.
So remember, we're looking at two things. We're looking at the labor market and inflation. And so headline inflation last year was 2.6%. And we've said, assuming the labor market remains solid and strong, we want to see further progress. We didn't actually make much progress on core PCE inflation last year for reasons that I can explain, but nonetheless, the progress wasn't there. So we want to see a resumption of progress. I'm not going to put a really specific number on it. I mean, the truth is the economy is strong, the labor market's solid, and we have the luxury of being able to wait and let our restrictive policy work to get inflation coming down again, and that's what we're doing.
Is there any concern at the Fed that deporting millions of undocumented workers that do a lot of crucial work in the agriculture industry, in construction, in the hospitality business will create upwardly pressure on inflation in this country?
So we don't, we don't have concerns about policies. We just look at the data, and labor supply has actually, the new labor supply from immigration has actually come down quite sharply over the second half of last year. And
BOOKMAP does work for select altcoins.
Demand is also.
You get it in the link below. Find out more at bookmap.com. See what the candlesticks are holding.
We're going to look at
but wouldn't taking a million workers out of the economy have a direct impact on
it? Could. We'll just have to see how supply and demand match up. In any case, we don't. We're not here to comment on immigration. We're here to achieve.
Right. No, I totally get that. I'm just figuring if you take a million people out of the workforce, how do we make that up, and how would that have an upwardly inflationary pressure on our economy? But moving on, recently the Cleveland Fed's new tenant rent index tumbled to a negative 2.4 year-over-year rate. Does that type of deflation in shelter make you more positive on future interest rate cuts?
One way or another.
Yes, but the thing is,
I'm gonna get you, get you.
In the aggregate, housing services inflation, I believe that's a measure of current rents, so market rents that are happening. And market rents have not been showing much inflation for a long time. Market rents don't make their way into rents until leases turn over, existing leases turn over, and that's been the slow part of the process. We have seen a lot of progress on that, but we're not there yet. We're not back to levels of housing services inflation, which is what I described, but we're getting there. We're making clear progress.
You recently said that employment prospects are solid, and construction employment, which represents 6.1% of all private employment, is falling significantly. Does this concern you?
So we look at the aggregate numbers. There are always industries that are growing and not growing. I think the last few job reports have been significant job creation. You saw the one here a week or so ago, which revised up the last 2 months in strong job creation. In fact, it looks like the job creation may actually have picked up a little bit around the end of the year.
Thank you. And just very briefly, given what we had had a business capex recession, the last time the economy faced uncertainty with large tariffs, are you monitoring capex developments closer this time around?
We're monitoring them carefully, yes.
Large.
Thank you.
Large tariffs.
Gentleman yields back.
Large.
Chair of our oversight.
Large tariffs. What the heck is he saying?
Thank you, Mr. Chairman, and thank you very much, Chairman Powell. Good to see you. I did recently chair
This guy's cool. This guy looks like he's in the mafia over here. I like this guy.
We
Let me tell you something. He's got to be a dying, huh?
Debank crypto. What do you think of that situation?
So it's, I think we're all
fight for what's right. Do not debank the crypto people. Fighting for us, man.
And
we're getting represented in Congress. That's bullish, right?
Fresh look at
I think that's bullish.
Area. It's
See, a lot of people representing us. That is bullish.
Banks that they can't bank certain people from certain institutions, anything like that. Nonetheless, we're hearing these things, and I take at least some of it is real. So we need to understand it and stop it from happening, because, and you know, if you look at what the banks are saying, they're really saying that a lot of this is that the enforcement of anti-money laundering is so tough that at any sign, any flag at all that gets raised, they just cut people off, and they can't explain. So that may be part of it, but I think we need to do some work, get to the bottom of it, and address this.
Thanks, Chairman. There were hundreds of letters, by the way, that were pretty clear that banks should avoid doing business with crypto companies. No such pause letters, as they're referred to, or communications of this coming from the Fed?
Not that I'm aware of. No, it's not been our policy. Our banks are doing business with crypto companies, and they're doing crypto inside the bank. Some of them are. We've been a little bit careful with it, but I really don't think we've been telling people they can't do it.
I think a lot of people, including us, would appreciate you doing a careful review of that. The banking industry itself is concerned that there's no vice chair of supervision to provide clarity on the multiple issues from Basel III to Reg II and debanking. Do you expect to have an acting vice chair of supervision? When do you expect to have an acting vice chair?
We don't have. We need to have a confirmed vice chair if we're going to have a vice chair. There's no such thing as acting for us. Okay. But I don't know. That's up to the administration. I'll tell you the way we look at it is we're going to do our jobs, and I think there are a number of things that can be done that'll be very constructive.
They got to take this straight right here.
If there is a new vice chair for supervision, I will welcome that person and do everything I can to make them successful.
The stop would be 96.5.
Yesterday,
entry now, take profit will be at 99.156.
Finalized fairly quickly.
Looks interesting.
Given last year's extensive public comments,
that might pump hard right there. Look at that thing above the point of control.
Capital and fully incorporates industry feedback. And as you stated, you felt that the capital reserves for banks was about right. So I'd imagine you're not looking for anything too drastic there.
No, that's right. Yeah, that's correct.
Yeah. Okay, great. So the CPI this morning came in a little hotter than expected at 3%.
So hot.
Did this surprise you?
It was, the CPI reading was above almost every forecast, but I would just offer a note of caution on this. Two notes of caution. One is we don't get excited about one or two good readings, and we don't get excited about one or two bad readings. The second thing, though, is we target PCE inflation because we think it's simply a better measure of inflation. And so you need to know the translation from CPI to PCE, and we get more data on that. Tomorrow we'll get the producer price index. So I think it's always wise, and the people who follow us closely know this.
PPI
we'll know actually what the PCE readings are late tomorrow.
Okay. So in the past, as you well know, you called inflation transitory. Then the Fed signaled 3 rate cuts for 2024, and the market's priced in 6.
Go ahead, short it.
Now,
I dare you.
You're saying that there's no rush to cut rates. Do you find this forward guidance stabilizing markets or fueling volatility?
So this is the summary of economic projections, the dot plot. And, I think markets like it. It's kind of the only, it is the forward guidance that we give. We don't really mean it as forward guidance, but markets do take it. Sometimes they take it too seriously. I think most market participants understand that it's highly conditional and dependent on what actually happens in the economy.
And that's the feedback that you do receive? That
Yes.
They find it
yeah.
Helpful?
And when we talk about getting rid of it, market participants will tell you, please don't do that.
Okay. If DOGE found $1 trillion in wasteful, unnecessary spending, the Department of Government Efficiency, of course, and wouldn't that have a positive effect on inflation, allowing you to perhaps lower interest rates and, of course, reduce our deficit spending?
So this is if $1 trillion of spending were eliminated, you'd have to run that through a model, but I mean, ultimately, it would be hard to say exactly how it would affect the economy.
You got a $6 billion budget at the Fed. Would you welcome DOGE to have a look under the hood?
We haven't heard from them, and I've got nothing for you on that today.
Thank you, Chairman. I yield back, Chairman.
Gentleman, time has expired. The gentleman
Take a look over there. What you got in there?
4 or 5 minutes.
What you got under the hood over there? Let me see what you got in there.
Again.
I want to see what you got.
I want to start there.
Let me peek in there.
I don't expect you to comment on the policy here, but there's been a number of actions.
Show us what's in the trunk.
Scrubbing or limiting data that the private sector has historically relied on to understand.
Now we got some resistance here at 97,000 for
impacts
Bitcoin.
on the economy, public health data, information about breaking things down by gender, by race, that we need to understand granular shifts in the economy. I realize that you don't rely exclusively on government data, but has there been anything that has happened since the Trump White House was sworn in that has limited the Fed's access to information you need to fulfill your dual mandate?
Not that I'm aware of, no.
If there was, will you commit to sharing it with Congress so that we can fulfill our oversight responsibilities?
Sure.
Okay. When you were here in July, I'd asked you this question. I just want to confirm that you still feel the same way. Is it still your view that the Federal Reserve that climate change constitutes an emerging threat to U.S. financial stability?
I guess I would say it this way. I wouldn't say that climate change is currently a threat to U.S. financial stability.
An emerging threat.
I would say that it may emerge over time as such.
Okay, so $250 billion of losses in California. We've now got multiple states where the insurer of last resort is insolvent. Reporting today that California is having to bail it out. I know we have a difference of opinion on NGFS. I don't want to go into that. But is the Fed monitoring what is happening to our financial system as those insurers pull out, as insurance rates goes up and people's both access to property insurance and the cost of insurance are going up? Are you monitoring what's happening systemically in our economy as a result of that?
Yes. The question, though, if the question is it a threat to the financial stability of the United States? That's really the question. And of course, we're following that very, very carefully.
Okay. So if you're monitoring it, where is the risk that was being backed by the insurance industry moving? Where in the economy does that risk now live?
So insurance companies, as you know, can cancel policies and not issue them, and they can leave states, and they're doing a lot of that. So where do those risks fall? They fall on homeowners and other beneficiaries, and they fall on state governments and to some extent the federal government. But they don't fall on, they don't cause large financial institutions to fail.
Are you seeing shifts in mortgagers, mortgage servicers, their willingness to provide loans to homes as those insurance rates go up or disappear?
Implicitly, if you can't get insurance, then there won't be a mortgage. So
Okay.
I can't point to episodes where that's happening, but that's certainly where this looks like it's headed.
Okay, because there has been reports going back several years now that the more prone your property is to flood risk, to fire risk, the more likely you are as a bank to offload that onto Fannie and Freddie, right? We've seen that data happening. So that then raises the question of, and this is maybe just purely academic and wonky, if you own a set of cash flows and you want to sell them to me, and we both have full information,
I'm only going to buy them from you at an accretive value to you to the extent that I have a lower cost of money than you do, right? Just, I mean, sort of like Econ 101, right? So if we own Fannie and Freddie right now because they're in receivership and they are throwing off a string of cash flows to the Treasury, setting aside the nuances of how the CBO scores all these sorts of things, isn't the sale of Fannie and Freddie on the assumption that the buyer and seller have perfect information, the same information on both sides of that transaction, if that's accretive to the American taxpayer, doesn't that implicitly assume that we have to sell to somebody with a lower cost of capital than we do?
That's I followed your logic there. Yeah.
Okay. And that would only not be true to the extent, I suppose, either that the buyer violates every rule I had in my M&A career of paying for upside, as they say, or that the buyer lacked information that the seller had, right?
Fair.
Okay. So what I'd like to understand from you is, does that create a conflict of interest for the United States government? Because if we have if we have information about climate change being scrubbed from our data sets, and we have a White House that would like to sell Fannie and Freddie, are we committed to efficient markets that depend on accurate, transparent information, or are we committed to making a quick buck?
There's that squeeze, baby. Let's go.
People not to be uninformed.
97,300. Back to 98K.
Is the Fed committed to transparent
back
markets?
Back above the 97,200
and the second one,
weekly support of resistance, baby.
I think we're getting a little away from our mandate at the Fed. I mean, the idea of privatization is to get this off the balance sheet.
God bless you. Shout out to Still Nasty for sending people over. Shout out to Pig on PK Chan for 4K. God bless you, brother.
Sure, and there would be good reasons for that. But if that is coming at the expense of
and 4K, God bless you,
taxpayer, we need to be transparent about that.
Right, but we have private sector banks.
Booming.
We could make all credit could be made cheaper if offered by the central government, right?
Gentleman yields back. The gentleman from South Carolina,
how you work a trade.
Timmons, is recognized for 5 minutes.
That's how you work a
trade. Thank you, Mr. Chairman, and thank you to Chair Powell for joining us today. Yesterday, in an exchange with Senator Warren on stress testing, you said that the Fed
shout out to Hidden Treasure. We love you, brother.
Quote, because
I'm shouting you out, baby.
Very substantially. In
shout out to Hated Hero, Paul Wood, Chris B, Andre Mateo Music,
shifted since last year.
Teresa Zybarth,
confused because after reading up on
Hope J. Dalla,
lawsuit,
and there's the pump, baby. Look at that thing. To the first, finally about to hit that target, 97,600 for Bitcoin.
Their case seems to center on the Fed not complying with the long-established process laid out by the Administrative Procedures Act, and while some at the Fed may not classify stress tests as a rulemaking, when they require banks to alter their capital levels, they have the effect of rulemaking. So, Chair Powell, I'm hoping you can clear this up for me. Is this a matter of adapting to a post-Chevron world, or was this the Fed unlawfully using stress tests as a backdoor to increase capital requirements on banks without issuing a formal rulemaking and having to go through the legally required notice and comment APA process?
Pretty good chance that the next sentence I say would be evidence in the court case that we're having. So I'm not gonna get into just debating what the law is because we're in litigation. I will say it's not just Chevron, though. I think it's clear from other.
I'm out of trades right now. That's a Bears divvy.
The Procedure Act
makes me want to just chill.
Are also raised, just generally.
And this is where liquidity kind of dries up around 11, 12 o'clock. We had a big move.
The playing field.
So we got our move today. Congratulations to anyone that took it with me.
Requirements is very disruptive and
stuck to the model. I stuck to the plan.
Process is
executed,
helpful for long-term
and made it through.
This economy. On to the next question. So foreign banks, many of which are smaller than their domestic counterparts, play a larger role in providing financing in the Treasury market. U.S. banks,
above the 200 and the 4, that could be a huge
pump. Primarily because regulators have made this activity less profitable for them. Stricter capital requirements, liquidity buffers, and compliance costs stemming from regulations like Dodd-Frank make it more costly for U.S. banks to engage in Treasury market operations, particularly in repo and securities lending. As a result, foreign banks facing fewer regulatory hurdles have stepped in to take on this crucial role, providing the liquidity and financing needed. This shift has significantly altered the market landscape, with foreign institutions now holding a larger share of financing operations that were once dominated by U.S. banks. So my question is this: why are we setting up a system where the U.S. Treasury market needs to rely on so much on foreign banks for proper functioning?
Defying Bears did there, pumping hard.
I see the trend that I see is that we have very significantly raised the capital costs of supporting market activity, and especially for low-risk activities that are low risk, low return. What's happened is the amount of treasuries has grown much greater than, it is now much greater than the capital that's allocated to intermediate. So that's why you see low intermediation and relative lack of liquidity, and I think it's appropriate to do something about that. And that's something that we'll be looking at, is to reduce the enhanced supplemental leverage ratio to account for that. This is something that we proposed before, which I think is intended to increase liquidity in the capital markets for banks subject to it.
Thank you for that. I want to end on a positive note. I want to discuss the optimism among the American public. Small business optimism experienced its largest increase in 40 years following President Trump's recent election, with continued positive momentum in the months since. This surge reflects growing confidence in the economy, spurred by expectations of favorable policies and reduced regulatory burdens for small businesses. The index is not only well above its 50-year average, but also reached its highest point in December since late 2018. This shift has caught the attention of many across the economic landscape. Back home in South Carolina, I frequently speak with small business owners who are enthusiastic about the future and eager to help their businesses thrive under the new administration. So my question is this: how do you see this significant jump in optimism translating into tangible outcomes in terms of investment, hiring, and overall growth for small businesses?
So we know that sentiment really matters. It's really hard to model it, but you do think about it when you're thinking about your forecast. You think about optimism and that kind of thing, because that's what supports investment. All the investments that companies make, they have to have on some level optimism that it's worth shelling out this money to do what it is they're doing. So it's a key part of how economies work.
And given the potential for increased investment, are there specific policy adjustments or economic factors that you're watching closely to ensure that this optimism leads to sustainable growth in the long term?
Best thing we can do is achieve price stability and also full employment, maximum employment, and then create a stable environment.
Please subscribe to the channel. I greatly appreciate it. Get the likes up to the watchers. On our way to 100,000 subscribers, pushing every single day. We do not stop giving you data, news, information, live trades, and more.
Be helpful. Thank you, Mr. Chair. You're back.
Every single day.
Gentleman yields back. The gentlewoman from Massachusetts, Ms. Presley, is recognized for 5 minutes.
I went to high school, I believe.
Chairman Powell, you're at
went to high school with this girl.
Point, and we need leaders who are courageous enough to speak truth.
I could be wrong. Let me see.
And who are committed to helping every person who calls this country home. There are many who wrongfully justify Trump's presidency and the lawless work of DOJ as good for the economy. Well, Chairman Powell, you actually know something about the economy. The Federal Reserve has a dual mandate, maximizing employment and stabilizing prices. And it is clear to me that Donald Trump and Elon Musk's actions are impeding your work. The threats of tariffs against our allies are not helping the Fed do its job, nor will they help people across our country. The Boston Federal Reserve put out a report last week which estimated tariffs would be inflationary and raise prices. Chair, I ask unanimous consent to enter into the record the report titled "The Impact of Tariffs on Inflation." Additionally, Donald Trump has threatened mass deportations. He seeks to terrorize immigrant communities and separate families, claiming it will help the economy. I don't think so. And neither does the Peterson Institute for International Economics, who estimated that employment would drop 7%. Chair, I ask unanimous consent to enter into the record the report titled "Mass Deportations Would Harm the U.S. Economy."
Without objection.
Now, Chairman Powell, I want the Federal Reserve to be successful. So if Elon Musk and his Doge bros were to walk into the Federal Reserve, intimidate staff, access classified data, and take control of the agency, the same way they did USAID and the Consumer Financial Protection Bureau, would that help or hurt our economy?
We don't have that happening. I'm not going to speculate.
Well, on your own website, it says, quote, "The Federal Reserve is accountable to the public and the U.S. Congress," unquote. So I would like to see a clear answer on this. Your staff are watching, Wall Street is watching, Donald and Elon are certainly watching, and we all want to know, what is your view if DOGE does to the Federal Reserve what it has already done to other independent agencies?
What we're going to do at the Fed is keep our heads down and keep working, wait to see what new policies emerge, and try to make a thoughtful, sensible set of policies on our part once we understand the implications of those.
If Elon Musk or anyone from Doge attempts to access the Federal Reserve's private data, will you immediately alert the members of this committee?
You just need to.
Sure.
Thank you. This is as clear to me as night and day. Donald Trump and Elon Musk are not trying to help working class people. They're trying to help themselves. They want the Fed to be a tool that helps the rich get richer, banks get bigger, and regulations disappear altogether. But that is not your mandate. The Fed must maintain its independence and integrity. Put the interests of the public before Elon Musk. The world's richest man does not care about the price of eggs. He doesn't have to when he has already bought the presidency. I yield back.
The gentlewoman yields back. The gentlewoman from California, Ms. Kemp.
When did you write that?
For 5
Before 10 p.m.
Thank
or
you,
after?
Chairman Will and Chairman Powell, thank you for joining us today. And I want to commend you again for ignoring the outside noise and staying true to Fed's dual mandate. Chairman Powell, it seems the advent of artificial intelligence and other emerging technologies has helped the United States increase productivity when compared to other countries around the world. That makes our country more competitive and envy of economic growth. So do you believe that this boom in productivity is sustainable in the long term? And if so, how does that increase in productivity
Love to go to these shorts,
affect your
98,200
models to
for
forecast
Bitcoin.
inflation, therefore monetary policy?
We have had
back
a boom
above the
in
200 and the
productivity.
22-hour
It is
time
most
frame.
welcome.
Staying
Of course,
alive.
it would be great if it were sustained. I think if you look at
Again, you don't know what's going to happen. You have to just take it one step, one day at a
Kind
time.
of one-time things, and some of them could be more sustained. You mentioned technology and AI. To the extent that's part of it, that could be a sustainable increase in the rate of growth and productivity. To the extent it was more about job reallocation, people switching jobs coming out of the pandemic, that's kind of a one-time thing. Also, we had a wave of startups, a wave of early stage companies, startups. That also tends to be linked to productivity. That too could just be a one-time increase in productivity. Literally, no one has the record of being able to successfully forecast productivity for very long. But again, it's going to depend on many things, and it's as long as we have this increased productivity, it's most welcome and important.
Thank you. Over the past decade, we've seen Fed intervene with more regular frequency to maintain the orderly functioning of the U.S. Treasury market much more than decades before. It seemed like the private sector was able to manage this without too much Fed intervention pre-financial crisis, and a long-standing and growing bipartisan consensus that the SLR and other regulations may be causing this. If so, what do you think the solution is to reduce the need for frequent Fed intervention?
So I do think we need to work on Treasury market structure, and part of that answer can be, and I think will be, reducing the calibration of the supplemental leverage ratio, as you mentioned. That's something that I have long supported, and for the reason that, the quantity of treasuries has grown really significantly, and the capital allocated to intermediating trades in treasuries has not, in fact, has shrunk. So we need a liquid treasury market, and this is one of the things that we can and should do is to reduce the calibration of that measure.
Thank you. I want to go back to March 2023 in response to the fallout of Silicon Valley Bank. It is my understanding that the Fed is analyzing ways to create a more efficient process for financial institutions to access the discount window. One issue that has come up is that it can take extended periods of time to assess and determine the lendable value of collateral, potentially denying the institution's ability to access liquidity quickly. Is the Fed looking at ways to streamline the process to assess and determine the value of collateral at discount window?
We are. We are looking at, so there are sort of impediments to the efficiency of the discount window. And those are things we can work on and we're working hard on. There's also the question of stigma, though, that banks are reluctant to use it because of the so-called stigma of using it. And that is a very hard problem to solve. We're also working on that one.
Regarding the fast review of the discount window operations, can you give us an update on what problems the Fed was able to identify, what solutions you are pursuing, and what the estimated timeline is for any action?
So the study is ongoing right now. The work's ongoing. But, you know, essentially, you touched on some of this. It's inefficient, it's slow, and we need to have collateral, processes that are very quick and very efficient because they need to be quick and efficient in a crisis. So that's part of it. Just general modernization, investing in technology, modernizing the discount window. That's part of it. The harder part is really turning it into something that banks are comfortable using because they feel it's not stigmatized. And we're working on that too.
The opening the discount window 24/7 could really help the banks in California, especially the state that I represent, the Southern California that I represent. Thank you.
Thank you.
Gentlewoman yields back. The gentleman from New York, Mr. Torres, is recognized for 5 minutes.
Thank you, Mr. Chair. President Donald Trump has been asserting among the most aggressive and expansive claims of presidential power that we've seen in our nation's history. He's taken the unitary executive theory to new extremes. He's claiming to have the authority to defund whatever agency he wishes, to abolish whatever agency he wishes, and to fire whomever he wishes, even if it means violating an act of Congress. Mr. Chairman, suppose for a moment the president were to ignore the congressional statute that establishes the independence of the Federal Reserve. What economic consequences would result from the Fed losing its independence?
I think, research over many, many years in many, many jurisdictions shows that some degree of independence is very important in keeping inflation under control. And the connection is obvious. If politicians are going to want to be reelected and things like that, they're not going to be focused on the longer term. We have the mandate to remain separate from all of that, to stay out of all of that, so that we can just focus on, not on election cycles or helping or hurting any political party or politician, but just on serving the public as a whole. That is essential, and it's uniform, I think, across all advanced economy central banks.
Much like the Bureau of Fiscal Service, the Federal Reserve has highly sensitive payment systems. President Trump and Secretary Bessent granted Elon Musk and his team of outsiders access to the central payment system of the federal government, a system that is often described as America's checkbook. Would you, as the Federal Reserve Chair, ever grant a team of outsiders access to the Fed's central payment system without sufficient vetting and sufficient security clearance?
Well, no, but let's remember, we're the Treasury's fiscal agent. Everything we do is under their direction, and there are Treasury payment systems, and then there's our side of the wall, which is the actual payment to the recipients, and so we control access to that very, very carefully.
Right, the Treasury issues the payments, and then you process them.
They order us to pay someone, and we just pay. We don't have any. We don't question payments. We just make the payments, and we control access to those payment systems very carefully.
And what would be the danger of lightly granting access to the Fed's payment system to outsiders without sufficient vetting? Like, what could go wrong?
Well, the reason why we're so careful about it is just, for one thing, the possibility of mistakes and someone coming in and changing the code and things like that. So we have very careful access. Another one is just you open it up to more cyber risk and things like that. So, I mean, I think all, really important computer programming is subject to very, very careful access restrictions, and we're no exception.
Right. So you believe, as I do, that granting an insufficiently vetted team of outsiders access to the payment systems of the Treasury or the Fed would radically raise the risk of a cyber breach at the hands of foreign adversaries like China and Russia?
So we're talking hypothetically here. I can tell you that is not something that's happened relative to. We can speak to the systems that the Treasury has asked us to operate on their behalf, and that has not happened in those systems.
I represent one of the poorest congressional districts in America. I have cash-strapped constituents who pay exorbitant fees simply to transfer their own money, often to loved ones abroad.
Cryptocurrency solves that problem.
Play a role in radically reducing.
Oh my God, let's see crypto should pump right now because that's a bullish statement for crypto.
What is your position on expanding FedWire access for the purpose of reducing the cost of remittances and payments?
So we do. FedWire is really between banks. These are very large wholesale transactions. It's one of the world's most important, if not the most important, financial market utility. I don't think we're looking to open it up to, to retail customers. I think, faster retail payments and particularly cross-border payments are a subject of a lot of work in the international sphere. And
cryptocurrency, it's press the button,
the costs
dude.
and the risks of those.
Very simple. Very, very simple.
The commercial real estate, do you feel that continues to be a ticking time bomb within the financial system? What's your sense of?
I wouldn't say that. So we've been saying, and I think it's still true, that this is a problem that's been with us and it's going to be with us for a while. If I can say something modestly constructive, it doesn't seem to be getting worse.
Okay.
So there are a lot of embedded losses, and they're just going to need to be realized. So we're working with financial institutions to make sure they have a plan and understand their losses and can manage them.
Right. I see my time has expired. Thank you.
Gentleman yields back. The gentleman from Florida, Mr. Donalds, is recognized for 5 minutes.
Thank you, Mr. Chairman. Chair Powell, it's good seeing you again. I want to start with just a broad-based conversation. I know the Fed has been making adjustments to the Fed funds rate over the last several months, and what we've noticed is there's not been a lot of, although there's been movement on
97,500 holding really nice.
Been, minimal
Bitcoin looking for a pump here.
Intermediate to long-term rates. Can you expound on why you think this phenomena is starting to exist with respect to Fed rate monetary policy versus the general borrowing rates for businesses and consumers?
Right. So you're right, of course. We've lowered the federal funds rate, and as sometimes happens, longer rates have gone up. They've gone up and come down and gone back up. They moved around, but they're higher. And the reason is that, we don't control long-term rates. They react to a whole bunch of different things, including a sense of more deficit spending coming, including expectations of more growth and of risk of higher inflation, but not. So markets aren't pricing in higher inflation, but maybe pricing in that the risk of that is there. And that could be a reaction to new policies or not. But ultimately, though, the increase in longer-term rates is really mostly not about Fed policy or our job of maintaining price stability. It's about other things, the term premium in particular. Be happy to meet with you, and go through this in a lot of detail, more than you can do here.
No, I would love to do that. One of the concerns I have, as well as a lot of my colleagues up here on the Hill, is there is but so much that the Fed can do with respect to rate policy, and I fully acknowledge that. Wanted to get your views on that, but I think it's also the desire and this conversation happening right now, obviously with with Doge and Elon Musk, and the desires for efficiencies, but then also stability in federal spending and even bending the cost curve. Fiscal policy from Capitol Hill, do you think that would yield positive results in medium and long-term rates, borrowing rates, not just for the federal government, but for the American consumer?
When you say fiscal policy, you mean fiscal policy that would reduce deficits over time?
Yes, fiscal policy that will reduce deficits, fiscal restraint, I would say fiscal common sense over the intermediate and long term for the United States.
Yes, well, so I think part of what market participants think about when they buy our treasuries is how much more of this is coming? Are we going to get on a sustainable path? And they want to get paid. If the answer to that is, wow, we don't have a lot of confidence in that, then they're going to need, so the term premium, the so-called term premium goes up for that reason. And there's no question if we were on a more sustainable path, I do think rates would be lower.
No, and I appreciate that testimony, because one of the things that, while we do talk about obviously tax policy in another committee, regulatory policy throughout the entire federal government, I think it's important for the American people to know that Washington does have to be fiscally responsible. And if we are not, and I say all of Washington, if we are not, then the risk premium, so to speak, for borrowings in the marketplace are going to increase, not because of the American consumer, not because of the strength of the American engine, but simply because the amount of treasuries that we are putting out to market are just demanding a higher premium for every new dollar that we borrow, because simply people want to be paid back. And it's just something where, Chairman, you don't have to comment on that. It's something I think is important for the American people to understand. That is the major issue, if you will, over the next 20 years, 10 to 20 years for the federal government, that we have to get our fiscal house in order if we're going to give the American consumer, who might be poor, trying to make a way in this country, middle income, trying to just take care of their children and figure out what the next stage in life is going to look like. People who are in the upper middle class who are now forming businesses, building some real wealth for themselves and for their family. All of that is at risk if the United States government does not take its fiscal health as serious as any other family and any other business would do. Real quick, Chairman, you said yesterday that as long as you're chairman, the U.S. will never have a central bank digital currency. Is the Federal Reserve or any of its member banks currently conducting any studies on CBDCs, either for retail or wholesale purposes?
I mean, we're not doing any work that is designed to lead to a retail CBDC. That's not happening. When we don't support one, we don't have legal authority to do one. So no, the notion of a wholesale CBDC is really not one that we think about or accept. We have, take Fedwire. Fedwire is a real-time, digital process of trillions of dollars every day between banks. Is that a CBDC? Some people would say that's...
Gentleman's time has expired.
So, thank you, Chairman.
Thank
I
you.
yield back. Thank you, Chairman.
Gentleman yields back. The gentlewoman from Texas, Ms. Garcia, is recognized for 5 minutes.
Thank you, Mr. Chairman. And Chairman Powell, thank you so much for being here today. It's always a pleasure visiting with you. I'm going to talk about a topic that both Congressman Gonzalez and Representative Preston brought up, which is something that's, I think, does impact our federal economy, but I know certainly does impact my district in Texas. I'm really concerned about President Trump's mass deportations efforts and their impact on your dual mandate. I believe the last time you were in front of this committee, I asked you about the impact immigration had on monetary policy, given last year's Congressional Budget Office estimates. As a reminder, the report estimated that the labor force in 2033 will be larger by 5.2 million people, largely due to the immigration surge. Since then, there have been more reports and research about the impact the immigration has on our economy, both in maximizing employment and stability in our prices. For example, immigrants are fulfilling lower paying and oftentimes dangerous jobs more frequently than U.S.-born workers. They earn more money, pay taxes, invest back in our economy through everyday goods and services, and help create even more jobs. A study done by the National Academies of Science, Engineering, and Medicine found that foreign-born workers, or as some people say, immigrants, pay $237,000 more in taxes over their lifetime than they receive in benefits. Let me say it again, $237,000 more. So these mass deportations will have a massive impact on both our economy and workforce, leading to a drop in production and spending. We're already seeing some of that in my district. Chairman Powell, I recognize that the Federal Reserve does not weigh in on policy, and so before you say that in your response, I already know that. However, immigrants
then what you asking about over here?
Both the unemployment and prices, as Representative Gonzalez detailed in terms of some of the work that they do. Does the Federal Reserve account for immigrants in its interest rate decisions?
Indirectly, yes. So we're looking at the labor market, and part of what drives growth in the labor market is population growth, and part of what drives population growth is immigration. So, sure, it can matter, and sometimes it matters a lot.
Right. And do you look at the consumer price index in terms of the immigrants as consumers And if they're afraid to go out because they may get deported, they're buying less. That's what I'm hearing from businesses in my district.
I think things like that would show up in the aggregate data, but we don't single out any particular group for that.
Okay. So can you quickly list some of your federal
and your time is up
responsibilities, and do you have capacity to assume the role of being our consumer watchdog as the president now is focused on getting rid of the Consumer Financial Protection Bureau?
So before Dodd-Frank, the OCC, the FDIC, and the Fed all conducted consumer exams and enforcement for the banks that they regulate and supervise. So for us, it's state member banks, and for the FDIC, state non-member banks, for the OCC, national banks. Dodd-Frank took all banks over $10 billion in assets away just for purposes of consumer examinations and enforcement, gave them to the CFPB. Statutorily, you could give that back to us or not, but it's certainly possible to restate the old order, but that would have to be something.
No, I realize you've also said that your team will be there to get the job done. You've got your nose to the grind.
We send a bunch of people over to CFPB. We would need those people back. We don't have the people now who could take that over. They moved many people from the Fed and the OCC and the FDIC.
So there would have to be a reallocation of resources.
Yes.
Okay. All right. So sounds.
Isn't her time up by now? How is she getting this much time? In 5 minutes.
And
what's going on here?
We may have to convince the president to make that reallocation of resources. So thank you for that. And Mr. Chairman, now I'd like to ask for unanimous consent to submit for the record 3 articles. One, the Brookings, the labor market impact on deportations, and another, the Federal Reserve Bank of Dallas, migration to Texas fills critical gaps in workforce, and the second one on unprecedented immigration surge boosts job growth.
Where's her teeth at?
And I yield back with 2 seconds.
Gentleman yields back.
Wow.
Last member to question the chairman today will be the gentleman from New York, the vice chairman of the subcommittee on capital.
Last one, everybody. Last one. We're out of here.
And you're now recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, it's good to see you again. After the last open market committee meeting, you said that the labor market conditions remain solid, unemployment has stabilized, and conditions in the labor market are balanced. This comes on the heels of a jobs report this past Friday that indicated the economy added 140,000 jobs during the month of January. Yet, when you peel back this data and look at recent employment data for the smallest of small businesses, the mom and pop shops, so firms without, not with 100 employees like those included in the jobs report, you see that small businesses are actually consistently losing jobs. In fact, the latest Intuit QuickBooks Small Business Index showed that employment for U.S. small businesses with 1 to 9 employees decreased by 42,000 jobs compared to January. Last month, in my home state of New York, small businesses employment decreased by 0.33% and revenue decreased by 0.62%, which is a decrease of $350 per small business on average. Do you believe that we are seeing the same economic and business trends between companies with fewer than 10 employees and larger companies?
I guess not. No, I mean, I think it's always the case that there are differences between sectors and size companies and all that. And, we're really left with looking at the aggregate numbers.
Do you take into account the current macroeconomic trends of the smallest of the small businesses when setting policies?
We do.
You do?
Yeah. I mean, for one thing, we read the same data you do. The Reserve Bank presidents come in, talk about their districts at length, and they talk about, if you read the Beige Book, they're going to talk about small businesses, nonprofits, everything. So we look at everything, but at the end of the day, there's only one national unemployment rate, but there are many, many subtle changes in the data that we monitor too.
We all know small businesses drive the economy, and I know there's a company in my district, Brinkman Hardware, 40 years ago. They started with less than 10 employees. Now they have over 200. So they are able to grow, and they do great work. But I think just making sure monetary policy really does focus on helping small businesses.
What about the eggs?
Is key to making sure the economy continues to grow. I'd like to move on to a topic that we've discussed on a few different occasions, Basel III endgame. It is well known that I had some serious concerns with the initial proposal. One of those concerns that we haven't discussed is how the proposal would have impacted the securitization framework. At the time of the proposal, there was no narrative explanation, data, quantitative analysis, or financial modeling rationale for why the P factor was doubled.
Protect my kids.
While I understand that Mr. Barr promised we'd see an economic analysis to support the proposed change, I believe that was never released. So, Chairman Powell, I'm wondering, in your opinion, have you seen any market pressures or changes that would have necessitated such an increase in the P factor?
I can't point to anything. I will say that we're going to look at all of that again when we get together again with the other agencies.
Ripping.
Try to move this forward.
Okay, well,
crazy.
The proposed doubling of the P factor would significantly increase the amount of capital required for securitization exposures, making securitization more expensive for banks to participate in and raising the cost of limiting the availability of credit for households
5 minutes.
and businesses.
He's playing with his pen too much.
Look at that.
What's he doing over
But
there?
given how this proposed change may negatively impact a bank's ability to act as market makers in the securitization.
This guy doing over there? What's up with that? You know what I mean? What's going on with this? What's up over there? It's a
last decade, we've seen the Fed intervene with more regular frequency to maintain orderly functioning of the U.S. Treasury market, much more so than decades before. It seems like the private sector was able to manage this without too much Fed intervention pre-financial crisis. Do you think regulation like supplemental leverage ratio, which some of your colleagues have commented on, is causing this? And if so, what do you think the solution is which will reduce the need for frequent Fed intervention?
I think part of the answer is going to be to reduce the.
God bless you, brother. I'm sorry to hear that you lost your
supplemental
daughter. That's so
leverage
sad.
ratio. There are a number of things
So
that probably
sad.
need to happen with Treasury market structure, but that's one of them.
That's one of the solutions, but do you think there's other things, and you'll all work on that?
I do, yeah.
Okay, I appreciate that, Chairman. Thank you very much for being here today, and I yield back.
Gentleman yields back. I want to thank Chairman Powell for being with us today. Thank you for your testimony.
Cake ripping.
Without all objections, all members will have 5 legislative days to submit additional written questions for the
5
witness to
days.
the chair.
Legislative
Questions
days.
will be forwarded to the witness for his prompt response. Chairman Powell, please respond no later than March 31st, 2025. This hearing is adjourned.
Wow. Congratulations, everybody. We did it together. I don't know how we did it, but we did it. And we made it through. Well, we also made some gains. We had some fun. We battled the markets. You guys saw me go through some ups, some downs, but I mentally persevered and I was able to get through. I mind synced with Crypto Billy. A lot went on today. So what do I leave us with now after this move, and where do I see us going? Well, we made it above the 200 MA on the 15-minute time frame. Again, I'm a very boring guy. I would say to flag out the 15-minute and see how the 21 comes into price action. Let's see if we can go sideways like this, connect to that 21 without losing the 200 MA. I know it's a very boring thing that I do, but it's the same thing over and over again. I would watch your 15-minute. If we do get a pump, we get a measured move up to about 99,800 almost. And, so see if we can stay above the 200 MA on the 15 while the 21 comes. If we can get another pump. It looks like it'd take a couple hours before that happens. All right. And that is my update for BTC. Everyone, thank you so much for being here. It was a 3-hour live stream. Absolutely insanity. Shout out to the over 2,000 people today. Can we get 1,000 likes, please? I would greatly appreciate it. Thank you so much for the love. All right. Last but not least, someone asked about this guy here on MEXC, and it just dropped. The market's pretty down, actually, after, I don't know. I wouldn't touch it. You do whatever makes you happy. So, everybody, I love you. Follow me at CryptoLiver33 for more. I'll show you behind the scenes of what's happening in the world and where I'm going, what I'm doing. Have some fun. So, thank you so much for jumping on in. I appreciate it. And I'll see you all tomorrow for another beautiful, amazing, and positive live stream. Stay positive no matter what. It's going to look bleak and dark some days. I buy the fear. I just kept buying the fear. And it perseveres no matter what. So may God bless everybody here on stream. Thank you so much for being here. And remember, be where you are, baby. I love you all. Thank you so much. The secret to success is getting started. You just got to keep pushing it. Eventually, you're going to have something for yourself. God bless you. Don't stop, though, every single day. It gets real hard, but somehow you make it through. And you find this deep inner strength that you never knew you had. And that's where you shine.